Broadly, by the next budget, the NSE will also be listed. Is that your promise?
Would probably do better than that, but hopefully.
Diwali Muhurat trading, NSE will be listed.
Hopefully, yes.
Hopefully, yes. All right. So that will be good news. But
just one question on that, right? So already NSE's valuation is close to 5 trillion in the unlisted market, which is nearly 5x that of BSE. So what is your thought process on the valuation of NSE as you go to list?
Madam, actually, as frontline regulators, we don't worry too much about our own valuation. And fact is, none of the employees got any stock options, nor we can even buy our shares or other shares. So
but unlisted mein to pop ho gaya after the
generally we are immune to all this. I mean, of course, outside people who actually invest money into NSE stocks, they would be having their own valuation. But broadly, our job is not to continue valuing anything.
Your job is to facilitate the business that happens. But Nilesh, what is it that you are looking forward to in this budget? Everything that could have been done from a consumption standpoint has happened, but FI is still not coming, rupees still weakening, the volatility that we saw in gold and silver. What's your wish list?
So one, in this budget, I want Honorable Finance Minister do trinity of impossible. One, continue to spend money on infrastructure investment as private investment is subdued. Second, please honor your own commitment of reducing debt to GDP ratio to 50% by 2031, which means this year's fiscal deficit has to be lower than last year. And to do that, instead of raising tax, please raise non-tax revenue, asset monetization, divestment, or some out-of-box idea. And finally, Mangalam, I'll borrow from what you say. In this budget, let's create a DG Yatra for entrepreneurs, both local as well as global. DG Yatra allows us to enter airports very seamlessly, very fast. Can we create DG Yatra for investment, both foreign as well as local?
DG Yatra for foreign as well as local investment. That's the headline that you've given us out here.
I have borrowed from what you told me.
We'll give it to you. Gautam, what are the 3 key numbers that you're watching out for?
So one, no negative surprises.
Okay.
That's an opportune time to make sure we don't have some nuances here and there which creates an issue. Second is there's some media reports about the longer term plan. That will be useful to give that stability in the policy making. But longer term, not just in terms of aspiration, but backed by specific policies. Third is always hope for surprises, right? We always
What are you hoping for? What are you hoping for?
Some markets, people are talking about potential cuts in taxes,
for FPI,
FPIs, etc. So let's see. Fingers crossed.
But will there be enough in the budget to revive the animal spirits of the market? Because that growth impetus has been lacking.
So that the fiscal space is limited.
Yes.
So the debt to GDP does create some room for innovation, and specifically with a 3-year view, because debt to GDP gives that flexibility not for this year but for the next 3 years. So if you mix that up with a long-term plan and aspiration, really.
So give us one adventurous reform you think the budget can deliver this time.
I would go back to what Nilesh said, DG Yatra. That will be brilliant. That will be brilliant.
What is the one thing that can bring the FPIs back, according to you?
So one, there are many FPIs who don't pay tax in their own country, endowment funds, pension funds. When they have to pay tax over here, obviously it hurts them. And while our returns could be higher on a post-tax basis, but there is a mindset issue where I don't pay tax in my country, how can I pay tax in other country? So I think we should rationalize that anomaly. Anyway, we give tax exemptions to sovereign funds, to citizens who are coming out of certain countries like Singapore and Middle East on capital gains, extend it to the foreign portfolio investors who are tax exempt in their own country.
And broadly for me, I have been on a regulatory side, on the administrative side, and for me, the simplistic frameworks are easy to administer. And if a country, the companies are giving profits, and naturally if their prices are going to go up, people come. If the country has no taxes, but also the losses are going to be there, nobody comes, right? So it's always good to sort of say that they don't come this way, that way.
But who runs the business of an exchange, do you think reduction on STT and some people are even talking about abolishment of that because they believe that the role of STT has been done? Do you think that would be a positive?
Yeah, always Tobin tax has been kind of known to create friction and sort of irregularities, but in a way India has proved on many occasions the economic theory is wrong. So I would say government, I mean it's almost 60,000-70,000 crore a year of STD. Government needs to figure out where the the next sort of funds will come in case you give some relaxation here. So it is always about what you want to give vis-a-vis what you want to take, and that's where the balance will come.
Nilesh bhai, the budget priorities of... Sorry. Okay, we have time? All right, quickly. The budget priorities always determine the investment climate, right? So when the government was spending on capex, we saw the industrials, railway, defense, etc. do well. Then the pivot came to consumption. This time, sectorally, what are you watching?
Liberalization.
Liberalization.
Just liberalize entrepreneur, they'll figure out where to go.
We have 20 seconds left.
All right.
So we have 25 seconds to go.
At 1 second, we will ring the bell in about 30 seconds.
You know, this is a magical bell for today because you have to make a wish and then ring it.
Yes.
That's when all wishes will come.
I'm like a priest.
He will ring the temple bells before the IPO.
10,
No.
9, 8, 7, 6, 5, 4, 3, 2, 1.
Yes.
There goes the opening bell. Keep going for it. The harder you ring, the more reforms will come by. There goes the opening bell. Nice.
Looked lovely, and I think we need some more ringing. We'll come back to you guys. But just looks fantabulous from there. Ashish bhai, Gautam, Nilesh bhai, Nimesh, Reema, Mangalam. Thanks very much, guys, for that. We'll come back to you. I'll just quickly run through where the opening is at, right? Nifty is down, 65 points, 25,260 is where we're at. And right off the bat, look at what's happening with Hindustan Copper. Look at this, 13% down, 14% down on Hindustan Copper. We can just go straight down to stocks on your screen. Look at MCX, limit down 10%. Let's just show that, all right? Hindustan Zinc, the other one, 10% lower. Vedanta, 8% lower. Nalco, 10% lower. And this is all commodity. That is what I was talking about in the morning. By the way, gold and silver are I mean, the underlying commodities trading on MCX are themselves locked down on lower circuit. I mean, the circuits are 3%, 6%, and that's how they move. And we'll kind of sort of, because of course stocks are taking a cue from what's happening there. Equities like MCX were basically a proxy for what was happening in commodities, underlying commodities, and underlying commodities took a really large, downdrift on Friday, and I think we're seeing that here as well. So 50 points lower, but all attention, of course, on what's happening here. I'm just looking at maybe the huge volumes as well, right? The ETFs, by the way, are the other way to look at this. So look at gold B's down 10%. I think silver ETF is also down about 10% or so. So here, unlike the actual commodity on MCX, and we'll have all these up as we always do at the bottom, the ETFs, the financial instruments, they're all down very, very sharply. What else? I mean, I think Hindalco is the other one I did not mention right on the top. It's down about 6% as well. So that's the start. We're down about 50 odd points at this stage. And it's 25,274 in a holding pattern, at least at the index level, and things will pick up as they always do. They kind of go quiet as we go closer to the 11 o'clock budget speech point, and then action starts to pick up as announcements start to come through. But there is a lot more happening as far as markets are concerned. And Nigel, you're going to walk across to the wall with to tell us what's happening.
Well, that's right, Prashant. Historic day, right? I don't think we've ever had a day when the markets have been open on a Sunday. Yeah. So in that case, in fact, it's rather historic. Just take a look at some of these rates that are flashing for you on the screen. You have the Nifty Bank, both of them have opened up on the back foot. But you pull up a few more indices as well. The mid-cap space, there was some pressure out there. However, the outperformer is continuing its winning ways. That's the Nifty Bank. That's holding more or less flattish. And that's giving some kind of hope out there. Metal index, that's getting absolutely slammed. So the sensitives to the metal index would obviously be the frontline names, stocks that have seen a big run. Hindustan Zinc and Vedanta top of mind. Remember, those stocks have rallied big time in the last month itself. Now with metals coming under pressure, both these two stocks in fact are seeing selling. Hindustan Zinc gap down 10%. This is following a 10% cut that we saw in Friday's trading session. Vedanta, that's the parent, so that as well is under some pressure. But it's not just the metals names. Some of these ancillaries, MCX went up one way, when this metal rally was taking place. So MCX is another stock. Let's get that one up for you. That's Vedanta. MCX as well should come up for you. That's under pressure. And pull up some of these gold financiers as well. Muthoot, Manappuram, as well as IIFL. All three of them actually have opened up well in the red. That's Muthoot down close to around 6%. These are stocks that have already seen a big run, so they are coming for some profit taking. A couple of notable names from the broader markets that are moving on very high volumes. IFCI, I'm not too sure whether or not they have a direct stake in NSE, but that's normally the stock that moves when you hear news about NSE listing. So IFCI is up close to around 10%. Cupid is another one that is moving on very high volumes in the initial part of trade. That as well is zooming away. So IFCI is running away. Cupid is up close to around 6%. Volumes are high on both those names. And in terms of losers, I was looking at a few stocks from the broader markets. You have Intellect Design. That's down close to around 6%. Big downtick is what you're seeing on that particular counter. Stovecraft is another stock that was reacting to its numbers. So that as well should come up for you on the screen. These are some of the big losers actually from the broader markets. The defense stocks will be in focus all through the trading sessions. And there was some mild green on stocks like BEL, HAL, as well as BDL. All of them should come up for you on the screen. Some green out there. And from the frontline names, you have Sun Pharma and Bajaj Auto. Both of them holding well in the green. So it's an interesting start to trade, Prashant as well as Lata. As I said, historic Sunday where you're tracking the markets and you have live rates on your screen.
Absolutely. I think we must give some credit to the greens as well today. And as you said, reacting to very good numbers, Bajaj Auto and Sun Pharma. And to your defense list, I will also add Paras Defense. That one also is doing reasonably well. The two big banks, HDFC Bank and Axis Bank, doing well. Expecting, I don't know whether the expectation that tax on deposits, fixed income, will be given a slightly kinder hand. Or generally, if economic growth is good, you know, banks tend to benefit. But private banks are doing very well at this point in time. Not the public sector banks, because their OFSs and divestment will be a kind of an overhang. One
quick word on Hindustan Zinc. Mr. Agarwal timing it perfectly.
Brilliantly.
You know, raising close to around 3,500 crores at around 685 rupees. Hindustan Zinc currently down big time. And in a matter of few trading sessions, Hormuz tells me it's lost close to around 60,000 crores of market capitalization. Not a stock for the faint-hearted.
Brilliant timing.
Right? We often talk about buying gold. And many people have said, and rightly so, there's no intrinsic value, although there is a lot of value in other ways. But it doesn't throw any cash flow out. But if you look at a stock, it does throw cash flow out. Names like Vedanta. So I mean, it's not now, maybe because right now in the fear and the frenzy, if everything is getting thrown out, but the differentiation will emerge as we go forward. Let's actually go back to our team at the NSE. They've got some super people with them to talk about what to expect from the budget and how markets will trade from here. Guys, over to you.
Well, you know, you did speak about gold, so let's pose that question as well to Nilesh. Nilesh, you know, you were saying that there is a fair amount of volatility, froth in the bullion market. And with the kind of decline that we've seen over the last 2 days, do you think you feel good that now people will come back to the equities saying that, okay, this is not as risky as the others?
So I'll request everyone to follow asset allocation. But then we all know human minds do get driven by greed as well as fear. I will still say, please follow your asset allocation. But chances are that over next 2 to 3 years, if you take a call, Indian equity looks better poised vis-a-vis, let's say, precious metal. Both are different asset classes. Risk-return profiles are different. But I think this is the time to have a look at Indian equity.
And in the equity, will it be the small, mid or large caps? Because large caps are very close to their all-time highs on the frontline index at least, not individual stocks. But mid and small caps, 15, 17% at an index level away from their highs, with individual stocks down 30, 40, some even 50%.
So our view over next 12 to 18 months is that mid caps and large caps should outperform small cap. Large caps are at all-time high near, but their valuation are still around historical average. Small caps are down, but they are still at a premium to historical average.
Gautam, never before has this budget-making exercise been at a time when there's so much uncertainty on the geopolitical front. Fragmented trade, volatile commodities, the INR continues to hit record lows against the dollar. To your mind, what can we expect in the budget this time, which can bring back the growth impetus, apart from, of course, ease of doing business for all entrepreneurs? That's one big ask. But outside of that?
So I think going back to the 2 points, in the context of the global uncertainty, having no mistakes or no negatives, it's a big win to begin with. And in that context, to give a longer-term growth projection of plan in the context of global uncertainty, like the finance minister saying that irrespective of the US trade deal, this is our policy-making path for the next 3 to 5 years. That does help a long way. Now, growth is an outcome ultimately. You can't, beyond a point, can't do much. The elements are already in place, the banking system, the macro stability. Animal spirits is spirit, right? It's not a mechanical thing. And it will happen. It will happen.
Do you think, given the economic survey's view that despite our macros being extremely strong, the rupee is weak, because now the reasons for that are not fundamental, it's more narrative based. So this budget will perhaps not look at fundamentals with such a tight grip, maybe slip a little on fiscal discipline for a bit, for bringing the narrative back to India. Do you think that's a possibility?
It's a possibility, but again, there should not be any panic around that. Look, even with the rupee move which we have seen, in the context of historical, like go back to 2013, we have far stronger macro environment stability right now. Okay? Rupee in this environment actually is helping to some extent. Okay? So we should not over panic around that. Some part of depreciation is fine. The context should be in the current context. We're seeing global uncertainty around all of us. So I won't panic too much about that.
CapEx growth, fiscal discipline and net borrowing would be the three numbers that you would be comfortable with.
And again, that should be broadly in line, not too much of a negative surprise. That's the critical part.
10 to 11% CapEx growth will be good with you?
Second?
10 to 11%?
Yes. Yeah. In line with nominal GDP, maybe slightly uptick. That's what market is also hoping for.
And if we do get a thrust on defense spending, say the defense budget goes up by 15 to 20%, does that build an investment case to invest in defense stocks? How are the valuations right now?
So look, defense is a broad-based basket. There are pockets which are more richly valued than the rest. But as a pact, the market is expecting and pricing in that there will be increased spending. So spending going up by 15% will not be a positive surprise for the markets.
Ashish Bhai, your last word on what is the biggest challenge that's facing Finance Minister as she presents her 9th budget right now, and what can she do? Your one, big wish list.
No, broadly, broad framework is when the world around you is so tumultuous. Everything is kind of going from their convention places everywhere else. You need to focus. And the BJP governments over the last 25 years have been very fiscally conservative governments. Broadly speaking, they have brought down the fiscal deficit, the revenue deficits. And for me, if you continue on what you can do, vis-a-vis what the rest of the world will do. So that's where I think they have focused over even during COVID, but even post-COVID, they have been focusing on few things like infrastructure, where the government is sort of pushing the infrastructure, and that's helping the rest of the economy to move on, ensuring that the tax structures are now rationalized, automated, with very little hands-on sort of personalized activities. And so for me, you have to create rails, and then many trains can run. And that's what they have been trying to do for last 11 years. And I would say if you continue on that, we have a good growth engine that has come up.
All right, continue on that path. Last ball of the innings. Nilesh Bhai, you're on strike. Take it away.
So last time when I came on CNBC-TV18, it was about precious metal, and I won an orange shirt. That was the closest color available. I just hope and pray Rina's dress is not indicating anything for today's market.
All right, with that, it's back to you guys in the studio. Nilesh Bhai hopes that Rima's dress is not the indicator of
and the contra-indicator.
I'd look at my tie as a hot pink tie because it's in the pink of the health, the economy.
Yeah. Okay, all right, guys, thank you very much. It's a fun chat, it's a useful chat, and I think, we'll keep going back to the NSE, which is, of course, one of the headquarters where we are sort of, beaming out of to cover this particular union budget. So once again, thank you very much, all of you there. Well, we have the other Nilesh here in the studio as founder of Envision Capital. Nilesh, good morning. It's always good to see you on a budget morning, and this is a Sunday morning, so thank you for that as well. What's your sense, Nilesh? And I think let's just start with the one big elephant in the room, which is equity taxation. क्या हो सकता है आपके हिसाब से और realistically? I mean, do you have any belief that something will happen?
क्या हो सकता है वो पता नहीं, but क्या होना चाहिए is more the thing that I think over the years we've introduced taxes on long-term capital gains, on dividends, on buybacks. There's also the STT which exists. I think something has to be done about this. We ought to either rationalize this or we need to basically remove it or eliminate it. Because we need capital, undoubtedly. And if we need capital, we need to attract capital. And I think for that, we have to make it more efficient for investors to participate in India's long-term growth story.
This is a really top-down macro view, but specifically, what is something?
So, for example, I'm just saying is if you want to encourage long-term, let's assume you don't want speculators, traders, all of that. People have gone on to saying buying and selling shares doesn't create economies, rightly so. But investment does create an economy. So probably introduce a category saying is that up to 1 year is 20%, 1 to 3 years make it 12.5, above 3 years make it 0. So introduce that category, redefine what long-term is. Instead of 1 year, take it to 3 years and make that investments 3 years plus, eliminate.
So under 1, over 1 remains, which is the intermediate.
Which is 12.5, so there's no going back. Just that 12.5 is basically you do it up to 3 years, above 3 years, remove it.
And if that were to happen, since you mentioned that specifically, what is the impact?
No, so I think there are two areas. One is I think domestic investors, for them who have found it difficult to kind of really have appreciation over the last year and a half, will be encouraged to basically stay on and maybe at some point of time increase allocations. That's one. Two is foreign investors who have been on a selling spree almost now for 5 years. It's not just a 1 year phenomena, but the sum total of 5 years is not encouraging. That's for a variety of reasons. We are not part of the AI trade, our valuations are relatively expensive. But the third area is that we are probably one of those few markets around the world which has a tax on foreigners. So maybe that's one. So if you basically introduce this category, I think it will at least induce them to kind of reduce their selling or at some point of time come in in a big way. I think if you look at foreign investors, their positioning on India is a massive underweight, okay? And there is huge room for them to allocate. I think it's just that you need to kind of give some carrot, some benefit, some inducement, which basically gets them, removes them from that inertia and starts allocating to India. So it's a combination, multifold impact which it can have.
No, that's a very big ask from the foreigners, especially sovereign wealth funds, who say we don't even have a tax set off because we don't pay any tax at all. And sometimes you're making gain on rupee terms because of the depreciation, but a loss in dollar terms, and still we have to pay a withholding capital gains tax.
And that tax is on the rupee gains.
Yes. So
and not the dollar.
So there is, there are a lot of complaints that have gone, but we have to see whether the finance minister is convinced. By the way, I just wanted to tell you that we saw the pictures of Nirmala Sitharaman, all of them trooping in to meet the president. The Indian constitution says the president causes the budget to be laid on parliament. So you would have the meeting with the president first because she lays the budget on the table and then it is read by the finance minister. We also saw Minister of State for Finance, Pankaj Chaudhary. We saw Anuradha Thakur some time back, the DEA secretary, and then of course the others, the revenue secretary and the expenditure secretary. Okay, Nilesh, coming down to brass tacks. Which sectors you think, she would encourage? I don't know how much you read of the survey. Any hints, any clues?
So clearly, what the survey clearly points to is basically manufacturing.
Yes.
Manufacturing is the need of the hour. That's our biggest hedge against maybe potential job losses in an AI-driven, AI-oriented world. There's lots which has already been done for services. It has to be manufacturing and trade. Which basically is the need of the hour, and whatever needs to be done for manufacturing and trade. I think the whole cut in GST rates, the free trade agreements, the positioning on customs duties, all of that essentially has been a great start. But probably you need to think beyond PLIs. We've got the production-linked incentives. Last year's budget had incentives for apprentice kind of a program. But maybe now you need to kind of have it more in terms of formal employment. So maybe convert the PLI to an ELI, which is an employment-linked incentive. And I think position yourself for the world market. I mean, I think the survey talks about entrepreneurial state.
Yes.
And entrepreneurs think in terms of TAM.
Yeah.
And when you're basically manufacturing for India, your TAM is relevant for 1 billion people. When you're looking essentially as manufacturing for the world, your TAM goes up 4x, 5x, 6x because you're catering to a market which potentially is of 5 to 6 billion people.
If I may persist, name some sectors.
No, I still believe it's going to be areas around defense, around electronics, around semiconductors. These are essentially, obviously, the relatively, if I may use the word, new age kind of manufacturing opportunities. And then there is the whole conventional pack like textiles, jewelry, etc., which will benefit through the free trade agreements. And then, of course, a lot to do. We talk about ease of doing business. I think we should change that to ease of doing manufacturing. Yeah. I think once we start to do that, I think it'll be a paradigm shift.
All right. And as we heard our Prime Minister say, reform, perform and transform. Hopefully, we'll see some measures in that direction. But let's welcome our other guest as well on the show. We have Mr. N. Venu, the MD and CEO at Hitachi Energy India, who joins us on the show. Good morning, Mr. Venu. Thanks a lot for speaking to us here on CNBC-TV18. It's a big day, and you definitely have a wish list, because the last few days, there has been some kind of nervousness about imports coming in, about, loosening the leash a little bit, which could create for a business like yours. So tell us, what is on your wish list, sir?
Good morning, Nigel. First of all, thank you for having me in your show, and really looking forward for the big day, not only for the 1 year, but we are really looking forward some kind of direction for a multi-year, a little bit of long-term views on the growth momentum, etc. in that. From our standpoint, is a very clean and clear expectations that, continuity on the CapEx spending. I expect, at least personally, at least high double-digit growth in the CapEx spending. That will create a huge amount of, opportunities and demand for various industries, including ours. And coming back to the sectoral side, I know that there will be a lot of focus on the AI, deep tech related things. That's absolutely important. But at the same time, to have a focus on the AI, you also need to have a lot of strategy and focus on the energy systems. And especially AI data centers, you need a robust, flexible power systems, and really looking forward kind of whether it is a local manufacturing things, and those are the things we are looking forward into the budget.
Okay, that's well said, Mr. Venu. But we just had the India Energy Week. Mr. Hardeep Puri was available, for consultation. I'm sure all of you all have already sent your consultations in the entire power ecosystem, which, as you say, is needed for data centers. Which part do you think will or should or could get some benefit? Will it be the distribution piece? Will it be the transformers? Grids? Because there is a lot of kind of dysfunction when the grid has to adjust for solar and adjust for between thermal. What are you expecting at all?
No, I'm expecting 2-3 things. One thing, absolutely, we need a more manufacturing, local manufacturing, end-to-end manufacturing need to be there. At least 2 to 3 times more than what capacities we have, and that is what is required. And then we need a lot of, not only the PLI, but in a PLI 2.0 kind of things, where we really need to rapid productions, rapid manufacturing, rapid, skill sets. It's not only just, bring the technology and manufacturing it, but we need an end-to-end manufacturing focus is required. And that's number one I am looking forward. Number two, on the discom side, because most of the data centers will be located in the states, and you need to have a very robust power, sanctions, power flexibility, and that needs to be done in that. So discoms has to be empowered. Discom need to be, create separate cells for the data centers, because the data center growth is going to be huge, and it's not like, normal industry will take 3 to 4 years. Some of the data centers are, we see in other parts of the world, they are building in less than 12 to 18 months time frame in that. So whole ecosystem has to adjust to this kind of time frames, including supply of transformer, for example.
Okay.
Yeah. No, I think 2 years back, they allowed sovereign wealth funds and, that category
to invest
in infrastructure. FDI infrastructure, that was tax-free. But the point is, Lata, that FDI, all these guys come in as FPIs. They're registered as FPIs. So if you want to do something for them, you'll have to just do something for the category as a whole. Yeah. And of course, AI is not just AI. It's not just roads and bridges. It's all kinds of infra. Now, AI is, of course, something which Mr. Venu said. Mr. Venu, we have more questions, but as always, on a day of the budget, we have limited time. And I request you come back once the budget speech is over to discuss this more. Thank you very much for joining us here on the program. Let's cut across to Shireen now. She has the star-studded panel, former Revenue Secretary Tarun Bajaj, former Defence Secretary Mr. Aramne, and the former CBIC Chief and Senior Advisor at KPMG, Vivek Johri. Shireen, over to you.
Thanks very much, guys. The budget editors are here to decode what Finance Minister Nirmala Sitharaman is likely to deliver. And without further ado, let me get straight into the big issue that the market is hoping for and certainly waiting to hear the FM speak about. The former Revenue Secretary here with us, Mr. Bajaj, let me start by asking you, the big chatter that Digi Yatra for foreign investors and domestic investors, frictionless entry, that is what Nilesh Shah just told us on the channel. Do you expect any change at all on LTCG, any change at all from a FPI perspective? Are you working with that assumption, expectation at all?
I would say the way the numbers are coming for the current year, I would have my doubts if there's going to be any changes in LTCG and STCG. But you never know. The budget always gives surprises to the market. But my own view is that it is very unlikely that there would be any changes. And I think the changes having been made last year or last year. So I think stability is the theme of this government. So they would like it to continue for a few years. So I'll be very doubtful if they do.
You'll be surprised if at all it happens. So what do you believe the government could do by way of sending out a message to both FDI as well as FPI?
So I would say the first thing is we really need to analyze why the FDI and FPI thing is happening. The FPIs are taking money out. Though there is a good gross FDI, I think it is about $60 billion, but the net FDI is much lower. It has to happen that after a long period of time when the FDI was coming, some money would start going out. The Indian industrialists will also start investing outside. So I would say even if these little changes are made, which the market is anticipating or the Bombay is expecting that to happen, it may not change the way FDI and FPI will behave in the times to come. So the dollar is actually becoming stronger as compared to the Indian rupee. So it doesn't make sense for the FPIs to make investments. As soon as they make their investment, the very next year their investment goes down. So I would say it would need a different kind of a mindset rather than
any short-term fix, short-term fix at this point in time. Mr. Johri, you know, the big story that's playing out on our screens right now is the crash in commodities that we've seen overnight. Silver, gold, all of the stocks reacting here in India as well. You know, do you believe that there could be the possibility of a higher duty, import duty imposition on gold and silver? Would it make sense at this point in time?
It's quite tempting to do that. But there's a downside to increasing duties on gold and silver. And in the past, our experience has been that if you increase duties beyond a certain threshold, they always lead to more smuggling and more, illegal, sort of illicit imports. So if at all there is an increase, I'm not putting any bets on it, but if at all there's an increase, it will be moderate.
Moderate?
Only from the point of view of raising revenue.
Will disinvestment be revived? That's my hunch. And as I said, the evidence shows that it's unlikely to, given that we've seen that it's been virtually dead over the last few years. Do you expect a revival on disinvestment, Mr. Bajaj?
So I'll answer that question by saying that I hope you're right. But the way things have happened in the past, I don't think it'll be a big bang. We are expecting IDBI to happen. I think I read it in the papers yesterday that would happen. And some small bits might happen here and there. But I don't expect that what was announced earlier, that one bank or two banks will go. I think it'll be slow and
steady. There is consensus, though, on just one item, that this is going to be a year for defense allocation, Mr. Ramne, to go up, if not by 15%, perhaps even higher, 20 to 25%. And that's the number that you're working with as well, correct?
Yes. In fact, defense capability improvement is most important at this juncture because of the regional conflicts and also global situation. So capex in defense is likely to go up. Whether it's 15% or 20% will solely depend on the readiness of the department and ministry to place the orders and also to take the delivery. The increases will be contingent upon the previous orders which were placed and which are ready to be delivered. So all in all, there is a scope for at least 15 to 20% increase because of huge orders placed over last 3 years, and they coming to maturity and fruition in the current year is likely to increase the budget by at least.
As well as the emergency procurement.
Yeah, the second important aspect is the emergency procurement. 2 tranches of emergency procurement are right now going on. If both of them mature into delivery or at least to come to certain stage, I am hopeful that the capex will increase. Apart from capex, there will be huge increase in the non-salary revenue expenditure, which will basically help the services to shore up their inventories and other equipment.
Okay, so 15 to 20% higher allocation for defense. But, gentlemen, I want to understand from you, because both these individuals here have been part of the budget making process till very recently. Part B is likely to get more focus and attention is what we're given to understand. What would you read into that, Mr. Bajaj?
So, to answer your question very curtly, I would say I'd wait for another hour to see what it contains rather than speculating on national media as to what it would contain.
But I'm not asking what it would contain. I'm saying, what do you believe it signals the decision to focus more on Part B or give Part B as much focus as Part A?
The Part B always had more focus than Part A. I've done Part B and Part A separately, and I would say that most of the people, and especially your audience, would be more interested in Part B than Part A. But here I would say maybe the government wants to give a longer vision or medium-term vision, because there's always been this speculation by the foreign investors that there is no stability in tax systems in the country, and every now and then we get a surprise. So maybe something to that extent would happen, because I also see that the government has done enough on taxes. The GST thing has happened. On the personal income tax, it has happened. On corporate tax, it's already happened. And customs, Mr. Johri is here, and he will bear me out that this time we are expecting a lot to happen on the customs side.
Correct.
So I would say that is it.
Mr. Johri, what would you read into that? And customs, I think again there's consensus that import duty rationalization is going to be the big one. And you've told me as well, you expect, we've gone from what, 23 to 8, and now you expect 8 to 4 in terms of tariff lines.
So yes, it's quite fair to assume that there would be a big push on customs rate rationalization, like we did for GST. And I expect the number of rates to come down at least to 4. But more, other than that, I also expect Part B to delve deeper into ease of doing business. Because there's a lot of concern. You talked about FDI and all that. There's a lot of concern about uncertainty in the current tax regime, and how investigations get taken up, interpretative issues get converted into disputes. So I think there will be some vision that will be laid out on how to deal with that. Maybe some immediate measures, and maybe some medium-term measures, administrative and legal, on how we can deal better with disputes and closing disputes and so on.
Mr. Bajaj, before I hand it back to the markets, because the markets are also fairly volatile, the Nifty now moving into the green, as has the Sensex. But how much fiscal space, how much fiscal room does the finance minister have to maneuver? I mean, everybody has put out a wish list on what they want, but at the end of the day, you've got to balance all of those out. How much fiscal space does she have, you think?
So what I would say is that over the past few years, the revenues showed a very good buoyancy, which has not been the case this year, especially after the relief given both on personal income tax and GST. So in that sense, the fiscal space would not be as much as it has been in the past. So I would say that the budget has been going up by almost 7, 8, 9% in terms of the total budget size. At the most, we can expect a similar increase in the current year, because there would also be a base effect, because the GST changes came up in September, October. Till September, we may not have that much of a rise in GST. So I would say that the space would definitely be lesser than what it has been in the past, looking at the trends that we have seen in the current year.
So that is the budget setup as we count down to Finance Minister Nirmala Sitharaman's 9th budget. Limited space, but do expect a lot as far as import grade rationalization is concerned, and perhaps even a longer term roadmap that the government may hold out as far as taxes are concerned. And defense, that's the big story there, that the defense sector allocation is going to be significantly higher. GST collections in 1.93 lakh crore rupees for January 2026. I remember we every month we would chat about GST collections. Are you missing doing that?
No, I'm missing teasing you, because you would every time ask me, when will you cross 1 lakh? And I said I'll stop that question.
We're almost at 2 lakh crore rupees now as far as GST collections are concerned. But Prashant, back to you guys. We'll have, of course, our budget editors with us through the course of the day. Back to you for the market.
Absolutely, Shireen. And there is a lot happening, right? And look at the Nifty, 15 points higher, which means it's come back into the green. And while underlying commodity prices on MCX have not recovered, and this is the point I was making earlier, stocks are a different matter. Stocks have recovered. Look at something like a Vedanta. Just look at the intraday of Vedanta. It's recovered 6% from the day's lowest point. And then maybe just look at Hindustan, steel stocks actually. Steel. Names like JSW, Dalal Street, I think those have also recovered. The pure play, Hindustan Copper, Silver, which is Hindustan Zinc, those have not recovered. MCX has come off about 4% off the lows. It was down 15%, MCX. A lot of brokers trading gold and silver for their clients would be out of margin. And I guess that is the reason why there's I think, no doubt, forced liquidation this morning, which is underway. There is, remember, expectation that perhaps import duty, and that is the reason why futures on MCX for both gold and silver were trading at an 8-9% premium. That may still happen, but that is only when the speech comes. So, but you got to live till then, and they will be, because of lack of margins, etc. And margins have gone up substantially from under 30% to 60, 63% on Friday evening. All that is kind of playing out this morning as we have been highlighting from the word go. We'll take a quick commercial break here. Markets, of course, because of this commodity thing which is going on. Otherwise, going into the budget, especially till 11, it kind of goes flat, very, very quiet. And then things pick up. But because of all of what we've seen in commodities in international markets and consequently here, there is all that activity. We'll be joined on the other side by Dinesh Kanabar of Dhruva Advisors, Sunil Badala of KPMG India. We'll start talking about, of course, the elephant in the room, if I can call it that, taxation. Stay with us.
Welcome back. The Nifty and the Sensex have just about moved up into the green. So clearly a lot of losses washed off. I guess early morning positions, especially on metal stocks, had to be corrected. Thereafter, there is a lot of optimism on defense stocks. Drone Chari is the one that's doing extremely well. BEL, of course, Paris Defense among the mid-caps, that is. Mid-caps were at one point minus 0.7% and now it's about 0.48%. Gokula's exports is up. That's indicating some hope.
Look at the Nifty, Lata, right?
I know.
This is the right state of the Nifty. 1 point change.
That's how it is.
It is usually very, very flat because, it's tentative, it's kind of,
And today being a Sunday, it ought to be, but we had a terrible Friday of metal
No, the only thing which is throwing everything off, as I said, is commodities and metals, right? What happened. And, it's a historic one for Friday. So obviously, without international prices and feedback loop functioning, what's happening is happening.
Absolutely. When would you have a backdrop where there is a 27% drop in silver?
Yeah.
So, there, and of course, other things, copper and gold have also had.
Just one more word from the broader markets. While we're talking about the frontline names, there are stocks that are moving high on very good volumes. IKEO Lightings, that's up 13%. Volumes very, very high out there. You have Euro Pratik as well, that's higher. Shilpa Medicare, that one as well. Volumes very, very high, for a few minutes into the trading session. All these stocks, I'm highlighting them because they're up more than 10%. So market is taking note of some of the earnings reaction and bidding up the stock. Aztec Life Sciences, that's another stock as well that's up and about. So select stocks, they continue to do a thing of their own. And it's good to see at least market is taking note of some of that good news.
Yeah. And TPC Green, Nigel, right? And TPC Green is up 4%. I'm not sure.
They're expecting something on nuclear.
Exactly. So it's all, a little bit of, there is that budget element of, people can say that budget doesn't matter, importance is faded, but everybody before the budget or on the day of the budget.
For a trader,
it's very much
important.
Absolutely. Valchandnagar Industries, right? It's a defense company out of Pune. It's up 4%. It's got volumes as well. There is IdeaForge, drones perhaps, right? Defense and drones. So 5% on IdeaForge at this point. Avanti Feed, there is always the seafood sector, shrimps, etc., which finds a mention in this speech. I remember going back many budgets. So Avanti is up 5%. Dredging Corp, shipping, commercial shipping, we were talking about, is done very well, by the way. It's actually had a one-way rocket-like move, but 5.5% higher there. So you can kind of, look at this stuff. There is MTAR Tech, again, defense company, 5%. So a lot of stuff which is coming through is perhaps there is no other reason at this point in time except for expectations.
Just one point, Prashant, with regard to the metal index, which is down as we have been mentioning.
Yeah.
But I'm just wondering whether from here on, ferrous names could outperform the non-ferrous names.
Yeah.
The last 2 months, the non-ferrous names have done very, very well. Vedanta, Nalco, Hindalco, all of them because of the global factors. Because now there is a possibility that the dollar strengthens, because we've seen some kind of profit taking. Let's see whether or not the ferrous names, and if you just look at the screen, JSPL, Tata Steel, JSW Steel, all of them have gone bid up and they're on the verge of moving into the green. Yeah. Because Q4 will see good demand. Pricing has improved by 3,500 rupees per ton as well. So let's see whether or not the ferrous names can actually fight back and outperform the non-ferrous names.
Especially if it's going to be a manufacturer in India theme, then these could get a leg up. Though the survey very clearly mentioned, don't give protection to upstream because downstream becomes expensive if the inputs are expensive. But let's see.
These guys have already got what they want. They shouldn't hope for anything more.
Okay. Well, actually, the elephant in the room, as we have been saying several times, too many elephants in the room. It's always tax. After all, that's what the government can do, isn't it? And therefore, to decode what we can realistically expect, we're joined by two stalwarts, Dinesh Kanabar of Dhruva Advisors and Sunil Badala of KPMG. Gentlemen, good morning and thank you very much for joining us on a Sunday and for your patience. Mr. Kanabar, what's your expectation list?
Couple of things. You rightly mentioned that what is it that the government can do having regard to wherever we are today. So you look at things. We want manufacture in India. I'm seeing the notes about Anand Goenka, for example, talking about how do we have a manufacturing push. Then we have global tailwinds, headwinds, whichever way you look at it, where people who have studied in USA might not be able to get an H-1B visa and might want to come back to the country. And then you are saying that India wants to make its mark, whether it is in the manufacture of semiconductor, whether it is in artificial intelligence. How will we achieve all of this? How do we connect these dots? And two things come in. One is that we need extremely more investment in research and development. That's what's going to keep us ahead. And Lata, whether we agree or not, the Indian corporate spend on R&D is a minuscule of global corporate spend on R&D. And we need to up it. And can the government do something which will allow that investment to happen? Remember that not all R&D is successful. It's a patience game. It's a deep pocket game. And if the government can incentivize this, and Lata, I had an occasion to discuss this with government at great length. And two responses come back. One is, give a proof that if we give this incentive, people will spend more. And second, there are people who abuse it. That cannot be the basis on which you get law. If there are people assuming you need to have guardrails to protect it. But I do hope and wish that the government does give a boost to R&D and thereby give a boost to local manufacture. That's one very important thing. The second important thing, Lata, which I'm looking to, and I'm reasonably certain that this will happen, is amendments to customs regulation. This has been one area where digitization seems to have given a go-by. Huge amount of paperwork, backlog, litigation. It's estimated that about 1,52,000 lakh crores are stuck in customs litigation. And there's a huge backlog out. Can we come back? Can we first of all rationalize our rates? We have 8 rates. Can we sort of put it into a better form? Can we just have 4 rates like we did for GST? Can we do a Vivad se Vishwas sort of a thing under customs? Get a lot of money released. I think that's very, very important, very critical. And actually, I'm reasonably hopeful and expecting that that's what's going to happen this time.
Yeah, and absolutely. And I think very, very important points, Mr. Kanabar, that you made. Sunil, if I can come to you, your sort of, top 2-3 expectations about where you feel there is a real likelihood of something will happen.
Okay, so I think, obviously I entirely agree with what Mr. Kanabar mentioned. Incrementally, I would say that I think the market is expecting a few tweaks in the capital gains tax regime, as well as in the bond market and in the mutual fund. So let me just quickly touch upon all three. I think there is a concern about, STT and the increased long-term and short-term tax rates which were proposed in last year's budget. And there is definitely a rationale to kind of, reduce or eliminate STT or, capital gains tax rate as the case may be. But having said that, of course, I'm conscious of the fact that the government needs to have the fiscal room to actually do that. And I personally think that if government can find the ways, and I'm sure there are ways in which you can collect more revenue, then I think this is a good thing to do. It will boost the overall sentiments of the market. We have been seeing a lot of stress on the FDI investment. Also, we've seen FPIs pulling out the money consistently for last year or so. I think if you focus on some of these aspects, it will be good. The other thing I think we should look at is the bond market. Yeah.
Right. Sunil, sorry. Let's just take it, and I'll come to you on the bond market because you have a sort of idea in terms of what should happen there as well. But Mr. Kanabar is with us as well. Mr. Kanabar, you heard Sunil, right? You're smiling, so I think you're all of us would be happy if these taxes are brought down, but it's about what we want and what perhaps is possible in that sense. So what's your sense on this point, equity taxation?
So I think actually a slightly different point of view, if I could just tell you. There has been this whole going back and forth on tax treaty interpretation. And very recently, we had a Supreme Court judgment in the case of Tiger Global, where the 2 earlier Supreme Court judgments, which was in the Azadi Bachao and Vodafone, have been, so to say, overturned, where the Supreme Court has come back to say, under what circumstances should tax treaty benefits be given? And speaking to the venture capital, the private equity industry, there is a huge amount of concern that what seemed to be a settled situation has suddenly become unsettled.
Okay.
And I know for a fact that the government is concerned about this development. And I'm hoping to see that what sort of a certainty can the finance minister provide with regard to that. I think to expect a reduction in the rate of tax, of course, it's a utopia. It's something which we all the time always want. We want a reduction of STT and we want capital gains tax to go away and we want no taxation on bonds and all of that. But all of that really does not fit within the fiscal framework. There is a merit, of course, to the point which Sunil made about parity in taxation between equity and debt. But leaving that aside, the way I would put it is that government needs to give more certainty rather than look at reduction of rate of tax. That certainty is critical, and believe me, it will give of impetus to the market.
Absolutely. Sunil, that bond market point, quickly, 30 seconds. Just quickly.
So bond market point is very simple. I think on the listed bonds, we obviously know there's a parity between listed bonds and the equity. It's only about unlisted bonds, I think, that we're talking about, that they need to be brought at par with the listed.
Fair enough. Actually, even debt indexation for mutual funds was taken, and that's been a negative too. I take your point on debt. But gentlemen, do stay on. We have to go across to Shireen, who has a brilliant panel with her. She has Anand Goenka, the president of FICCI and the vice chairman of the RPG group with her. Shireen.
Well, thanks, Lata. Let's go straight across to Anand Goenka as the markets have moved back into positive territory. Very, very flat at this point in time. Anand, counting down, let me just check the time. We're literally just an hour away from the finance minister presenting her budget. Anand, as a manufacturer now, what is the best case scenario that FICCI's leaders are penciling in? What do you believe the budget is likely to take forward this time around?
But I think it's very important for government to continue to push to make India a manufacturing powerhouse. From FICCI side, there were a couple of ideas, suggestions that we had. One is to look at particularly creating an ecosystem for EMS sector. Just as in China, we have a complete ecosystem approach as in Shenzhen in terms of a mega electronics IT park. That will get a lot more value addition and cost benefits coming in. The second is an increased defense outlay, which will help the defense manufacturing sector, particularly in light of Sindoor and the uncertainty around the world that is happening. Two areas from the manufacturing side. The second big area that comes in place is infrastructure, whether it is data centers, power transmission and distribution. These are two large areas which will need a shift with AI coming in. And the second part of infrastructure is roads and railways to bring the cost of doing business down.
New schemes that you expect? Any new sectors that are likely to fall under a PLI scheme? Anything on that front, Anand, that industry is expecting? Any incentives for R&D? Is that what you're hoping for?
Yes, I think R&D innovation, clearly we have not punched above our weight here. There's a lot more that can be done. Usually what we've noticed in the budget is that the finance minister has laid out a long-term plan, whether it is giving insight into the R&D and R&D 1 lakh crore scheme or the National Manufacturing Mission. I think there will be more announcements in that nature or setting more clarity on the previous announcements that have been made. I think providing that long-term vision, continuity, will be very useful on areas such as R&D, job creation, focus on MSMEs, and leveraging the FTAs that have recently been signed.
Anand, before I let you go, I'm doing a pulse check. What is the mood within FICCI at this point in time? How many people, when we last spoke, you said that capacity utilization at 80-85%. How many people are looking at adding capacity? How many people are looking at hiring? How many people are looking at, better than average wage growth, which has been between 7 and 8% over the last few years? What's business confidence like?
Right. So post GST 2.0, we had a pre-budget survey, and we found that overall the mood is fairly optimistic. GDP growth rates are expected to be about 7 to 8%. We do expect an increase in private capex because demand has grown up. We are seeing about nearly 15 to 20% growth in the auto sector, as well as other discretionary and consumer product spends. And so as that utilization goes up, the mood is fairly positive in terms of private capex coming back.
Okay, private capex is the hope that industry is going in with, and that's certainly going to be the big wish of the finance minister and the government. Look, they've been saying for the last few years now that we've done our bit. We've given you corporate tax cuts, income tax cuts, GST cuts. What more can we do? Indian industry now needs to start doing the heavy lifting in terms of investment. But Anant, we'll come back with you once the finance minister's speech is over to decode the highlights of Budget 2026. Prashant, back to you.
Thanks very much for that, Shireen. So good chat there. And interested to see what corporates really are looking out for here. 8-point change. So markets are in the green. They're off the lows. Nigel has walked across to the big wall to tell us exactly what's happening in terms of single stocks. Nigel, over to you.
Well, for whoever's trading, Prashant, is looking a little bit better than what it was a few minutes ago, because the Nifty, as you said, has seen a bit of recovery. You have stocks like Sun Pharma actually bursting away from the Nifty pack itself. That's up close to around 3.5%. And the markets have moved into the green. Let's focus on a couple of big names then. The metal index, that's the big loser this morning. And that index, in fact, is underperforming by a mile. But there are some of these metal-sensitive stocks that are still under pressure, though they've recovered from the lows. You have MCX that should come up for you. That stock, in fact, is still lower. Let's get that stock up for you. That's lower, but that, in fact, has recovered a little bit. As is the case with Muthoot Finance as well. That stock as well, still trading in the red, but that's recovered considerably from the low. I'll tell you what, from the metals pack, if you look at it, you'll pull up a few ferrous names. JSPL, you should pull up a JSW Steel. Both of them actually are on the verge of moving into the green, or they're almost more or less flattish. While the non-ferrous names, whether you look at Vedanta, Hindustan Zinc as well as Hindalco. And from the non-ferrous names, I think Vedanta is standing out because the contribution of silver to the overall SOTP is rather low. And that's the reason why that stock has recovered close to around 7% from the lows of the day, because the contribution of silver is minimum. It's bigger aluminium play more than anything else. A few more names come up for you from the broader markets. Gala Precision, massive volumes out there, stock up 10%. IQ Lighting, that stock as well should come up for you, up close to around 10% as we speak. Big move is what we're seeing on both those two names. And throw in there Euro Pratik as well as Shilpa Medichem. All of them are flying away. So fair bit of action from the broader markets. There are a few names as well that are moving up. If you look at a PNC Infra, that stock, I think it's got beaten out of shape, but that's pulled back a little bit. And you have a divestment hope as well. IDBI Bank, that stock, in fact, is up close to around 3.5% with volumes quite high. So plenty of action actually in the broader markets, guys, though the headline index is just moved into the green. Not so bad times.
Absolutely. Thank you very much for that, Nigel. And, very snapshotty view of what's happening right now. Sajid Chinoy is with us at JP Morgan. Samiran Chakrabarti is with us at Citi. Gentlemen, good morning. Great to have both of you here. Thank you very much for joining us. We, the equity folk, get very excited, and we need... economists to bring us and keep us on an even keel, if I can say so. So thank you very much once again. It's a Sunday morning, and it's good to see both of you. Sajid, let me start with you. I read that report, and I think it's a brilliant way you capture the essence of what to expect, right? 5 questions. And there is so much in there. But, one or two things which is really top of mind as you get ready to hear the finance minister lay out the budget speech.
So, Prashant, I think first and foremost, I can't think of a time in recent years when there's been such a hostile and uncertain global backdrop. Remember, in the COVID year, the budget happened in February, COVID kicked it in March. The next budget was a year later, by which time, we had some sense of how COVID was playing out. This is truly uncharted territory where, the system that we've known for the last 80 years globally is unraveling. That creates both near-term uncertainty and creates concerns about medium-term growth. So I think the challenge before this budget is twofold. That on the one hand, when you've got all this global uncertainty in financial markets, the typical tendency of emerging markets is hunker down, right? Create buffers, create fiscal buffers, create monetary buffers, create external buffers. But, that sometimes comes at the cost of growth. Whereas the other impulse is going to be in such a, environment where, economic heft determines geopolitical heft. The tendency and the temptation will be to be adventurous and to be expansive. And so that for me is the central challenge between this budget. How do you simultaneously be conservative and be adventurous? My sense is that the way this will happen is the fiscal math will be conservative. I think, as was just said, a lot of the fiscal action happened last year. Direct tax cuts, GST cuts. with nominal GDP growth expected to be in single digits. There isn't much fiscal space, so I'd expect there'll be fiscal conservatism, which has been the hallmark of this government, to under-promise and over-deliver. I think we'll meet this year's target of 4.4, and there'll be more consolidation next year. So the numbers, I think, will be quite conservative. What everyone is hoping for is, outside the fiscal math, can we get announcements that excite not investment and hopefully attract back capital flows? But it's that mix of conservatism and adventurism, I think, that will be key in today's budget.
Okay. Hi, Sajid and Samiran. Thank you very much for sparing time for us. Samiran, you've read the survey with a fine-tooth comb. Can you help us with what sectors or ideas may get prominence?
So thanks, Lata. I guess there are two broad questions in front of the budget today. One is about allocation of capital, both domestic and foreign. At this point of time, we have less of foreign capital into the country and more of domestic savings coming in. But within domestic savings, there is a preponderance towards equity rather than debt. How do we manage this through effective policy instruments in the short run is one of the challenges that I will be looking out for in the budget. And the second one, as Sajid was mentioning, that in an absolutely hostile global environment, we need to rethink about our broader growth strategies. The survey is indicating that we should push towards manufacturing, not only domestic side, but also manufacturing for exports. We have heard this before, but this time around, what kind of newer strategies the budget throws up to achieve that goal? I think that's also will be very important for me. So both the financial side of the economy through better allocation of capital and the real side of the economy by pushing for manufacturing in a bigger way. I think these two would be top of my mind.
Okay, let me persist with that fiscal math, which Sajid took us through, Samiran. We now have the new how the new CPI series might look. And it looks like the CPI is going to be about 20, 30 basis points. Sonal Verma is saying even 50 basis points higher. Plus, the real GDP is forecast by the survey at 6.8 to 7.2. So do you think that the budget would be well within its rights to work with a nominal GDP as high as 400 trillion? Would the bond markets be upset that the calculation is too aggressive if they did that?
I think about a 10% plus nominal GDP growth in the budget, 10 to 10.5, I think will be treated by market as quite reasonable. But on a slightly different note, I think the challenge in this whole new CPI series is that the more the FY26 numbers are higher in the new series, there's a chance that the FY27 numbers will be lower by an equivalent amount, because the base effect will work in the reverse direction then. So what we have written is that while we understand that 40 to 50 basis point is FY26 numbers possibly higher, but at the same time, everything else equal, there's a 25 to 30 basis point downside risk to our FY27 CPI just because of this reallocation of weights.
Okay, fair point. Sajid, what's your sense about any sectoral push? Any read-through from the survey?
A couple of things, Lata, just to finish the discussion on the fiscal math. I think it's important to appreciate that we first have to hit this year's deficit. I have no doubt we will. But just to let you know, gross tax growth, even though December was very strong, April to December is running at about 8.5%.
Lower.
And so you need an asking rate of above 20% in Jan, Feb, March to hit your budget target. There's a sense here that gross taxes could be as high as 0.4% of GDP lower than was budgeted. The good news is that there were always buffers built on the expenditure side, and you've got buffers on non-tax revenues because both PSU and RBI dividends have been very high this year. So my sense is you'll get a rebalancing in the RE number in terms of taxes and non-taxes. Lower gross taxes and lower net taxes, higher non-taxes. Similarly, in the expenditure side, don't be surprised if CapEx actually beats last year's target, but revenue expenditure is much lower. So the first point is just to understand how this year's math plans out. No, I think on going forward, the survey makes a very fervent, passionate argument that India has to prepare for a new world. And in a new world, that's what I began. Geopolitical heft comes from economic heft. Somebody once said very famously many years ago, the best foreign policy India can have is to grow at 10% for a decade, right? And so I think the survey lays out some of the guidelines. I agree with Shaumiran that exports have to be the centerpiece of any such strategy in a world of global value chains. And therefore, what I'm looking for is, you've had a series of reforms the last 6 months. What will be very important to complement it with it is on the import side. The oldest adage in economics is an import tariff is the same as an export tax or as an equivalent import tax. So this will be a wonderful opportunity to clean up the whole customs duty regime, right? Simplify it, clean it up, rationalize the rates, correct duty structures. That seems to be a natural complement to the series of FTAs that we've signed. And I think the survey did talk about how protectionism upstream creates pressures downstream.
Yeah, just one quick point, Sajid. The RBI dividend number, it was 2.7 odd lakh crores last year, right? What could that be meaningfully higher? I mean, at the end of the day, gold, dollar are assets, right? Rupee is a liability. Rupee is depreciated. So could that be, could it be really chunky, bigger?
So I think this year the sense is, the dividend is going to be about 30,000 crores higher, but you're exactly right? The revaluation gains will be higher, next year if the rupee continues to depreciate. So that's one, source that has been reliable over the last few years, and that takes a little bit pressure off tax revenues next year. But again, I want the government to be conservative. I think nominal GDP of 10%, would be par for the course. Anything above could be ambitious. We're in a world with lots of Chinese excess capacity. Yes, you get some technical readjustments from the CPI rebasement, but the fact is goods prices are going to be under pressure for the foreseeable future, given what's happening out of China.
Okay, all right, got that, Sajid. Samiran, let me get you into the discussion then. The rupee weakness is something that has spooked the street, the equity markets as well. Some believe that maybe it's getting stretched on the downside. What do you think?
And what do you expect?
So it's rupees of...
No, what do you expect from the budget?
So rupees of function of balance of payment. So what I was mentioning initially was that one of the challenges for us today is that we are not getting as much of capital inflows that we used to get earlier.
Yes.
We are a lot focused on the FPI number, but the big swing factor has been the FDI number. So in a sense, if we can push for manufacturing in a more clearer way through deregulation and all, then there's a chance that the FDI numbers can also increase. If there is more tax certainty, that could be another factor driving that FDI. But somehow to push the FDI thing will, in my view, in the budget, the best support for the rupee currently. The current account is doing just fine. So it's all will boil down to how we manage the capital flow side. I am not really very keen to look for more sources of FPI increase through different kind of tax concessions, etc. That's a very short-term approach to getting capital flows. The real big one is to get the FDI numbers much higher.
Fair point. Sajid, you have written an excellent edit on how the states also have to contribute if we have to come down in terms of debt to GDP. The centre can move the needle only that much. The states have to move much more. It's possible, therefore, that all programs, like we saw in the MNREGS case, will come with more responsibilities for the state. How does it impact CapEx? Is there anything for the markets or for the economy from that kind of a move, which I very strongly expect, more conditions on the state?
Yes. Yeah, my worry, Lata, is that we've had the surge of cash transfers that's proliferated across states. It's now become very fashionable to do so. And as the economic survey also pointed out, these things come at a cost. And the cost has been twofold. One is you're seeing upward pressure on state deficits. We now have the RBI report on state finances. Last year was 3.3% of the deficit, which is not small. It's been widening in recent years. And there is a risk it's even higher this year. Remember, when there's a shortfall of gross taxes at the center of 0.4% of GDP, a lot of that is then shared by the states. So there'll be a shortfall of taxes for states as well, right? Number one. And number two, the other hit has been that we've just begun to see signs the last 6 months that all the spending on cash transfers affecting capital expenditure by the state. So what the center may propose, the states may dispose. So I think the real story in the coming months is going to be state finances, not central finances. And I'll say one quick thing also. Small changes in nominal GDP growth have huge implications for the asking rate for fiscal in the next 5 years. If the nominal GDP growth is 10%, the center can take its deficit from 4.4 to 3.6, most of which will happen by interest to GDP going down and meet its 50% of GDP debt target. If nominal GDP goes to 9%, or is running at 9% for the next 5 years, which is not implausible, then the center's deficit has to go all the way from 4.4 to 3%. And in that environment, if states don't consolidate, public debt on a combined basis doesn't move at all.
Sajid and Samiran, thank you very much for joining us. It's a big day. It's one of those days where, I think the markets interface with macros directly, and the big numbers make all the difference. We'll speak to you as soon as the budget speech, of course, ends for your first reactions out there. Let me toss it back to Shireen in Delhi. She's got another star-studded panel. Shireen, over to you.
Sajid, I've got a power-packed lineup here at the CII, and everyone's calling you Professor Chinoy. So thank you, Sajid, for doing a stellar job of putting together the micros and the macros for us here on CNBC-TV18. You're getting a tip of the hat here from the folks at CII who've been listening in to your conversation. But let me bring it back here to my conversation with the leaders of industry. Rajiv Memani, 30 minutes to now go. The big ask is there going to be specific measures or at least broad direction as it comes to FPI and FDI? We were chatting about this. You think the likelihood of any tax-related changes is low, but broadly, direction-wise, announcement-wise, what would you expect?
See, if you look at the overall scenario, I think the macroeconomic fundamentals are very strong. The GDP growth numbers are very strong, but we have a very uncertain geopolitical, geoeconomic environment. And we also have tax revenues that'll be lower than what the budgeted estimates are. So if you look at that, my view is, and it appears to me that there is going to be a lot of focus on manufacturing and how do you make manufacturing more competitive in India. So if there are steps around that, that makes manufacturing very clear, identify products, how India can be part of global value chains on some of those products, clear incentives, PLI schemes that are there for some of those products.
More PLI schemes, you think?
Yeah, incentive schemes, PLI schemes, whatever, depending on the product. I'm not saying for everything, but depending on what the product is. I think once you have clarity on that, then I think FDI will flow. Yes, I think from an FDI standpoint, if you were to look at concern, Shireen, the biggest concern is around, tax, legal uncertainty that happens in India. I think if we can clearly lay out whether it's advanced ruling, advanced pricing, settled negotiations, if there have been some judgments that have come up in the past, that there will not be any retrospective changes in that. If we can have those broad level assurances that are there in the budget, that India will be looking at that, then given the GDP growth, given the clear focus on manufacturing that we have, and a clear outlined path, I think FDI will pick up.
You think she will specifically address the Supreme Court order?
I don't think in the budget she will address this. That's my guess.
In her speech, maybe?
Yeah, I can't speculate on that, but I think at some stage, whether in the budget or outside of that, I think if they can specify, I think that'll be helpful.
Okay, so, lots for the manufacturing sector is what the industry is hoping for, linked to specific products, etc. And of course, that mega park that everyone seems to be betting on to further boost the EMS sector, the electronic manufacturing sector. I think that's one of the big ideas. Again, there is plenty of consensus that we may see that go through. So, Chitra, many thanks for joining us. What are you working with? What are your key expectations now?
I would want to focus again, taking off from Rajiv, manufacturing needs to be the push that we need to get forward. Clusters, tech parks to come around across the country, and also sectoral clusters is what I think we need to do so that we can, the ease of bringing the value chains closer to us is very important. There's no point in, getting things from all across the country. So this focus on sectoral clusters will be very important. The push on manufacturing is very much also there for us in the life sciences industry. And also R&D, the innovation quotient that we have to keep upping as we go forward. The public-private partnerships that are required, because the government does a fabulous job in facilitating projects and collaborations and partnerships between academia, research institutes,
so perhaps more of that.
Yes, private players like us, and
And specifically, as far as some schemes on R&D is what industry is expecting, whether or not we see a return of that, because as you heard our previous guest, the government has had this apprehension that, we give out incentives and we don't get back enough. So whether we're actually going to see a return of R&D linked incentives is the question. Mr. Bucketman is here with us. The last year, it turned out to be a leaky bucket, because what you were hoping for and what you had asked, the actual number delivered was much lower. So you've tempered your expectations this time on capex.
No, I haven't tempered at all. I'm just as aggressive on the ask for infrastructure spend as I always was, because the maths, it's not me saying this should be the budget allocation. It's the maths that suggests itself. Shireen, there is reasonable unanimity across political dispensations that infrastructure spend in this country should be around 7% of GDP. Now, it is also well known as a thumb rule that half of it comes from the union budget. So 3.5 should on GDP is the infra allocation that keeps pump priming the economy. And therefore, with the expectation of a 400 lakh crore nominal GDP in FY27, 3.5% of 400 is 14 lakh crores. So the maths suggests itself. So I'm only asking for an allocation of 14 lakh crores.
You're only asking for what the math is suggesting at this point.
What the math is saying. So I'm asking for the same thing. But last year, the allocation was virtually flat. And if we were to see 14 over last year, it would be a 27% increase in allocation. And with the current uncertain environment that the world is facing, we still need public expenditure pump priming GDP
Sunil
growth.
Mathur, you're smiling. A 27% increase in the capex budget. Is that what industry is? I mean, if that happens, that would be a bazooka, right?
Absolutely right. And I think if we do get to the 14 lakh crore amount, that would be a bazooka, because there is no doubt the country needs infrastructure as a foundation for private sector investment as well. And we need to speeden up on railways, we need to speeden up on airports, ports, reduce logistic costs. All of this is absolutely critical.
But what's the reality on the ground? Both in terms of tenders being awarded, tenders being executed on. What are we seeing today on the ground, both from the private sector, but more importantly from the government, because that's what is doing the heavy lifting still?
So I think, to be honest, a lot, the 11 lakh crores, close to that has probably happened. But it still feels slower than what it should be. The pace at which tenders are actually coming out in the last 6 months has actually slowed down. There's a lot in the pipeline, a lot that will happen ostensibly over the next year, but actual tenders with firm dates hitting the ground. And this is
the government and the private sector both?
So this is government. On the private sector, we do see a pickup in the last 3 or 4 months. It started coming. I think it'll take time to pick up over a period of time. I think the next 3 to 6 months will be critical to see whether this is a sustained growth or just a blip on the private sector side. But we are beginning to see bit by bit growth in the private sector as well.
27% higher capex. Where is she going to fund that from?
I'm sorry to...
Burst his bubble.
Not burst his bubble. I just think that to get 3 lakh crores incremental money, when you have total revenue of 48 lakh crores, to get 8% incremental is going to be a challenge, given the tax buoyancy is not there. And they've given this thing. I think if they can find a way, I mean, my realistic expectation is somewhere between 12 to 13 lakh crores in that vicinity. But if we can find ways to also incentivize private capex, because balance sheets are under leveraged, banks have a lot of money, there's also a lot of cash circulating.
So
if we can push,
what can they do?
No, I think the government has been doing a lot in terms of reforms. I think that's reflecting in the growth in capex that has happened. And private capex is happening. It's not that private capex is not happening. But I think it can be, hopefully, if we can move on projects faster, if there's greater focus on ease of doing business, clearances come faster. As Suchitra said, availability of land, power cost becomes more competitive. We have a clear glide path on 50 to 60 products that India needs to go after, or 70, 80, or 100, whatever that number is. I think investments will come in. I think we need to get the projects ready, whether it's PPP, whether it's otherwise, and move fast on the approval process.
Yeah, and
I think that is more realistic.
So, Vinayak Chatterjee, there is no consensus even on this panel to go with your number.
I'm not asking for consensus. I'm only saying there is a macroeconomic maths, and the maths suggests this figure. That's all I'm saying. I'm not even asking for consensus.
But I think, just to go on to that, Jireen, it's not only about the funding, and both Rajiv and Vinayak have their perspectives. It's also on the implementability, right? So you can put whatever you want to put, the number you want. It's actually got to be implemented. And the government has got a very good track record of now implementing 80 to 85% of the number that they put out there. So I think it's also important to take that factor in to see how much actually can get in.
It's interesting in terms, there's something I wish to point out as a very interesting change in the conversation that I'm noticing. Traditionally, the budget allocations on infra would be Jal Jeevan Mission, Pradhan Mantri Gram Sadak Yojana, Awas Yojana, NHI, those nice public. See what the language today is. Even pre-budget, we are talking high-speed rail, coal gasification, battery storage, nuclear, semiconductor, hydrogen. So the nature of the incentives and the allocations
and the sectors
we have moved from, I think it's an important shift in the budget lexicon, that we are shifting from traditional public sector driven Aam Aadmi type of stuff to new age infrastructure technologies being incentivized. I wanted to point that out.
No, that's an important shift that you talk about, and I suspect that we are going to see that being reflected in the budget. But Rajiv, of that basket of sectors or items that you spoke of, the top 5 that you believe will get some mention in the budget.
I would say electronics manufacturing for sure. That's been manufacturing for sure. I think semiconductors definitely. I think nuclear is another area. It'll be really good if coal to gas comes in. I think we have to find a way that we unlock our mining resources faster, because that gives a lot of focus on growth. I've not thought about what the top 5 will be, but these comes immediately.
Well, you've given us 4 already.
And some labor-intensive sectors, because I think it's very important that we focus on those as well. So. Because employment generation is a key objective, and AI and data centers will something that'll always be there.
That will find a mention. Rajiv Memani, Suchitra, Vinayak, and Sunil, many thanks for joining us here at the CNBC-TV18 CII Budget Headquarters. We'll have you back to not speculate, but to actually analyze the fine print and whether or not Vinayak gets what he wants, and he believes the macro. He's kind of like already like giving up on it. But thanks very much for joining us. That's the mood here at the Confederation of Indian Industry.
Ask for the stars and land in the moon.
Land on the moon. Ask for the stars, land on the moon. That's the mood here in industry. But the Nifty Bank almost 200 points higher. Prashant, back to you.
Well, the market mood is the mood amongst corporates in Delhi is keep expectations high here. Okay, market expectation is low. So the bar for being surprised positively, perhaps. But that's market's view, right? We've seen a big turn, Shireen. We were down in 60, we're up 60 on the Nifty, 25,384. But of course, all of this will, diffuse as we go into the budget speech at 11, kind of flattens out, and then the market will hear the speech, and depending on, of course, what comes through, the reaction starts to, sometimes when it's actually late into the speech, even after the speech, the real reaction starts to kick in. The metal index is still down 2. It's off the lows by a little bit. The Sensex is up a third. The Nifty is up about 0.25%. So those are the 3 big kind of indices we're going to talk about. We'll take a quick commercial break here. On the other side, we have Sandeep Bhatia, MD and Head of Equity India, Macquarie Capital joining in. Mahesh Nandurkar of Jefferies is going to be with us. And we also have Ashok Vadra, Group CEO, Ambit joining in. Dinesh Kanabar will be with us as well. Anant Narayan former sort of SEBI official, is also going to be with us. He's, of course, written a powerful piece which many have cited as a reason why perhaps equity and bond market taxation perhaps needs to be given a relook. So all of that coming up in just a bit. Okay, welcome back. There's 15 minutes to go for the Finance Minister to start reading out the budget speech. And it's a power-packed panel we have with us here. And so this is last-minute kind of wishes, expectations, high-conviction ideas, whatever you want to call it, right? Sandeep Bhatia is MD and Head of India Equity at Macquarie Capital. Mahesh Nandurkar of Jefferies is with us. We have Anand Narayan who's with us. We have Ashok Vadva, Dinesh Kanabar. So, gentlemen, all of you, good morning. Great to have you guys on a Sunday morning, and it's an important one. Anand, before I took that break, I was saying that you wrote that piece, and I think it's been widely circulated as perhaps, and many people are basing their arguments on the back of what you've said. Well, this should be done. So, just with 15 minutes to go for the speech, just quickly in a minute, tell us 2-3 points what you think should happen. I'm not saying will happen, but which you think can happen.
So very quickly, Prashant, I think there are two areas where our taxation, particularly on long-term capital gains tax, needs to be relooked at. One is with respect to foreign investors, the other with respect to our domestic investors. You know, globally, the major markets follow the OECD model of applying capital gains tax at the residence of the investor, not at the source where the investment is made. India is an aberration in that we have withholding tax on long-term capital gains on a residence-based model in India. Now, while we have tax treaties and such like, it is still a problem for global investors, A, because it's an aberration, B, because many investors are actually exempt from paying capital gains tax in their home country, and for them, any withholding tax in India is a problem. Third, even if you are liable to pay capital gains tax in your residence, the withholding that we do in India sometimes does not conform with the tax credit regime that they have in their country. And finally, we compute our capital gains in rupees. At a time of rupee depreciation, when the investor might actually be having a loss in dollar or in hard currency terms, this becomes a problem. So all of this, therefore, tells you that we should probably look to moving towards a residence-based taxation model as well, and do away with the need for withholding tax for foreign investors in India. This is not exempting them and penalizing domestic investors. This is merely moving to the global model of ensuring that it's a residence-based taxation. Similarly, for the domestic investors, Prashant, I would argue that we've seen a lot of new investors coming into capital markets, which is great. But if you see the skew of investments, 10 years ago, mutual funds had twice as much assets in fixed income as they had in equities. Today, it's the reverse. You have twice as much in equity than you have in fixed income. Now, if this was entirely because of risk appetite of investors, that's fine. But I would argue that taxation has played a role in this. 5 years ago, you would recall, fixed maturity plans used to be a thing. And today, they don't exist as a product. So I would argue that taxation is actually skewing investor asset allocation choices away from their risk appetite and possibly into riskier assets. Now, if you start taxing fixed income, particularly corporate bond and hybrid investments, at the marginal tax rate of your investors, that actually becomes more like a wealth tax because you're not doing indexation. Then for after paying a marginal tax rate for fixed income returns to beat inflation becomes that much more difficult. And I would argue if you're investing in corporate bonds or in InvITs or REITs, you're taking considerable risk and aiding good quality capital formation as well. So over time, I would love to see our taxation regime move towards an asset agnostic, uniformly low long-term capital gains tax regime. Now, all of this, if this creates problems in terms of tax collections, maybe we could relook at STT. After all, STT was supposed to be in lieu of long-term capital gains tax. But these two things, A, moving to a residence-based taxation for foreign investors, making it easier for them to invest in India, and B, moving to an asset-agnostic, low uniform LTCG regime for Indian investors in India, I think would be great for capital formation and investments in India. 3 cheers to you, Anand, for that. By the way, your analysis on CNBC-TV18 has also attracted, I think, record eyeballs on this issue. Quickly, Sandeep, how do you think the market will react? I mean, the ultimate that Anand is saying of, equality of taxation for equity and debt, it ain't happening anytime soon. But even if there is one step towards it, like, continuing with reintroducing indexation, I don't know what they would do. But if there is a step towards it, markets will be happy?
Definitely. I think markets will be happy. But I am actually going to go into this budget very circumspect. I think there are issues on long-term capital gains tax. The thought process has been to raise the long-term capital gains tax level. So Anant is actually saying the right things, but whether the right things get done or whether we move towards higher taxation even on capital gains tax, because there's enough data which can prove that the capital gains tax is paid by the wealthy in India, and therefore the wealthy can be taxed more. So I don't know whether this will mean lower taxes on capital gains tax or actually just moving towards higher taxation, which is currently the bane for debt taxation.
I don't know.
So that's one thing which I'm circumspect on. And the other thing is, I think also gold and silver ETFs could see some more restrictions because these are unproductive investments always. The whole idea behind sovereign bonds was that these should be financialized and used, but then of course the gold prices went up, and therefore then it became
so Sandeep, so import duties go up in gold, silver. I mean, that's if you look at where.
No, that would be very negative. I think it will just help smuggling. I think maybe they will take away the long-term capital gains tax benefits there. Who knows?
Yeah.
I think we should go with very circumspect because there's definitely pressure to raise revenue. We just saw the GST numbers come in, flash today at 6% for the month of January. So let's hope for the best, but let's not keep hoping too much.
No, I agree. Actually, like you, the market is also going circumspect. We haven't seen any all guns blazing entry into the budget. But let us go more threadbare as to what Anand said, because we have two tax experts over here. Yeah. First to you, Ashok, taking from Anand's point of view, what would be your feasible, ideal tax change?
What Anand says makes sense from a global OECD model perspective. But given our current tax position and the fact that we've only had marginal growth this year, largely because there were tax cuts last year and then GST cuts this year, I don't think we have the headroom to be able to do that. Going forward, perhaps a roadmap that can identify it as an opportunity, sure. But I think the two small steps that we can surely take is why have AIF on a different tax regime to mutual funds? If you think about it, the wealthy who you want them to come more and more to the market, because at this point of time, our market needs more support. With FPI selling out the way they are selling out, I would like to believe that domestic...
what Sandeep said, right? He almost made it like it's ideological kind of thing. You can tax the wealthy. Products like AIFs, at the end of the day, the category of investors is different. It's a more HNI and wealthier.
It's only creating an arbitrage.
No, I'm not saying right or wrong.
I'm saying between mutual fund and AIF, you're creating an arbitrage, which is absolutely unnecessary. It's one category versus the other category.
Yeah.
All that I'm saying is that the first step could be to say, okay, we'll harmonize the two and make taxation between AIFs and AIFs were really created as a vehicle to attract more investments into the market. And we've seen the benefit. you've seen how much money AIFs have been able to collect. So I would say the first step would be to try and see whether you can rationalize the two together. And on the other side of FDIs and not taxing, let's at least include insurance companies in investing in infrastructure projects. Today you have sovereign funds that are exempted. You have pension funds that are exempted, but insurance companies, including domestic insurance companies, there's a large pool of capital waiting to invest in long-dated assets. And infrastructure needs that capital. We are calling upon private sector to invest. And here is a large pool of capital sitting with domestic insurance companies that can go in there. So why not include at least insurance companies in investing in data centers and investing in all of the infrastructure projects? I think at least it's a step forward towards attracting a larger pool of capital. And again, a small step forward to what Anand said.
A fresh idea.
Yeah. And then, of course, if you can exempt sovereign funds and insurance companies from any investment, you bring in a new category. Say anybody who's investing for more than 5 years, investments more than 5 years shall be exempted from any capital gains tax in India. I think that would be a fantastic idea.
So you're not kind of sort of flip-flopping?
No, you're keeping your current regime. Yeah. You're just bringing a new category to say any investment made for more than 5 years by any of these investments, doesn't matter whether it's in infrastructure or in any other category of investment, exempted from India.
Mr. Kanabar, similar question.
Just a very quick thing. Unfortunately, while Anand makes a very nice point, which is very attractive, actually the OECD is going in a different direction. They've actually come back to accept that India's approach of taxing on a source base is more appropriate and more countries are adopting it. So while he's advocating that we need to move away from...
I looked at France, in UK, Germany, all of them have equal debt and equity taxes.
No, that's separate.
No, he's talking about
source versus residence. So OECD has actually in the last 2-3 years done a somersault to come back and say source-based taxation is actually an acceptable thing. I think the point which Anand makes, which are very important and right, is how do you tax notional income when you compute gains on the base of rupees? You can't be doing that. You have to give into account the currency of investment that is given. And I think the parity on debt and equity has merit in its own way. And I think I'm aware that it is being actively considered. Whether it will happen in this budget or not, I don't know. But lots of points to do out there. Yes.
Just one quick point. Gold and silver is Sandeep was talking about ETFs. And if you look at the way how prices were trading, markets are betting on. The spreads are locked in. So much of arb trade, etc., has happened.
So as you know, wherever the government has found that there is a degree of...
Actually, there is one consensus expectation that import duty is coming. That is, I can tell you. At least long term and all, we don't know. But this gold, silver import duty, markets are betting on. Your thoughts?
Wherever there is a betting, actually the withholding taxes goes to highest rate, 30%. And it is quite possible that at least that will happen. Whether import will come or not is, as Sandeep rightly mentioned, an issue of smuggling and whatever else unofficial channels coming. But to say that wherever there is a degree of betting happening, we will tax it. So the race horses, same thing. It's 30% tax. Same thing could happen to some.
So speculative kind of activity without okay, so that's another way to look at this. Mr. K.K. Mistry is also with us. He's, of course, veteran banker, needs no introduction. Mr. Mistry, good morning, sir. Thank you very much for joining us. We don't have to wait very long, 7 minutes to the budget speech beginning. So I guess top 2 or 3 sort of high conviction ideas, bets that you would have, hopes that you would have from the finance minister today.
All right. So I think first focus should be growth in the economy, creation of jobs. We still haven't taken into account the fact that in the next 3-4 years, we'll have a lot of artificial intelligence in India, and that could result in some challenge on jobs. So job creation, further pick up in consumption in some way or the other, because we continue to remain a consumption-driven economy. Manufacturing is critical for us. We are way behind on manufacturing compared to where we need to be. So something like an investment allowance that used to be there, or an accelerated depreciation, or some changes in the PLI scheme is something which could happen. And then capital markets. I was hearing your debate. I fully agree. I think the taxation for debt and equity should really be the same. There should be no difference between equity and debt. And also, I think Ashok said that any capital gains beyond 5 years should be fully taxed.
Mr. Mistry, if you do that, won't banks have a big problem? Or are you saying that for both?
They'll be advantaged.
No, banks will, if you
No, you need to understand that when money moves from one account to another account, or if I buy a share or you sell a share, the money moves from my account to your account.
No, Mr. Mistry, for the banker, it is not equally advantageous. You have to keep a higher HQLA in fast-moving money like mutual funds. And if it's a term deposit, you have to keep almost no HQLA. So they get to spend more, get to loan more when they get term deposits. So they will complain if it is, if interest income is not given a little bit of relief. But anyway, now everyone is asking. It's a big ask.
It's a very, very big one in that sense. But is that something you would wish may happen, but you're not, I mean, it's an idea, Mr. Mistry, right? That's what you're saying.
It's an idea. It's an idea. What I would like to see, which I'm sure is not going to happen, is some change in the individual tax rate. You bring down the maximum marginal tax rate in India. It's not going to happen in this budget, we know, but at some point in future, because that will spur investment, it will spur more confidence in the economy, and more money will come back in long-term investments, which is what we need in the country.
Okay. Well, run out of time. Thank you very much, Mr. Mistry, Anant, Sandeep, Mahesh, and Ashok, and Mr. Dinesh Kanabar. Let me toss to Shireen. She's also waiting with some guests.
Yeah, Lata, very quickly, we've got about 3 minutes to go for the finance minister's speech, but ideas there coming from the tax experts in Mumbai. Mr. Bajaj, at least a harmonization as far as debt and equity is concerned. Do you believe that they will go that far, at least in this budget, or signal the intent to do so in another budget?
I doubt.
You doubt. Even that you don't believe.
So basically on the debt side, I don't know what was being mentioned here. But on the debt side, what they have tried to do is they have tried to limit the arbitrages, because the FTs were always taxed at the marginal rate of tax for each individual. But there was this market debentures.
Right.
So they had a special tax for them. So all that has been corrected in the same tax structure. And it was done only about 2 years ago. Then,
so you don't believe that they'll unsettle that, at least at this point in time?
And then again, this claim happens that the government is not stable in its policies.
In its policy. Fair point. But to the other point, Ashok Wadhwa made a new scheme that if you're going to be investing in India for a period of 5 years or more, no capital gains tax.
I doubt.
You doubt that also?
I doubt.
Why do you believe that may not fly?
No, what I'm saying is I don't know whether this idea ever came to the government of India and the Revenue Department for them to consider.
It didn't come for you at your table.
It never came to my table, and in any case, you shouldn't be creating so many levels of taxation. If you do this, then this is it. This is what the problem with the 1961 Income Tax Act was, that there was a section which had about 50 or 60 provisions.
Right.
You can't understand what it says.
Right.
So you should have.
So Mr. Johri, Prashant is saying the market's consensus is a hike as far as gold and silver import duty is concerned, but you don't believe that that's likely to happen?
I said if it happens, it will be modest.
If it happens, it'll be modest.
It'll be modest.
Okay. And part B, the one or two things that you believe we're likely to see.
Ease of doing business, more of that, I thought. And there's a lot of buzz around an amnesty scheme for customs.
Yeah.
So it may well be in the realm of consideration. So
and I've been hearing that as well, that an amnesty scheme specifically for customs, we've had it on the direct taxes side, but for customs, an amnesty scheme will be a new one if it does come through. And that's the former CBIC chief saying he believes the time may be right for that. Sir, we just had Vinay Chatterjee saying 14 lakh crores capex budget, a 27% increase. Would that be even possible?
We don't have capacity for 14 lakh crores. In fact, last 2-3 years, the capex budget was so high that some of the departments are unable to fully spend it. So expecting a 27% hike may not be practical. It will be modest in terms of 5 to 10% because the infra pipeline, which was set up a few years ago, is almost complete, and many of the practical works have already been taken up. I don't think 14 crores can be a practical figure. So
5 to 6% is the expectation as far as the capex budget is concerned. Don't expect 15, 20, single digit, low single digit is the expectation that the former budget makers are going with. I think we have about 15 seconds to go for the finance minister to rise in Parliament. And of course, it is likely to be, we'll see that initial burst of the opposition. Whether or not that's going to carry forward is the question. But that's the action coming in from Parliament as we wait by. But Mr. Bajaj, if they were to announce one big idea, do you think it's likely to tie in with this whole AI infrastructure, electronic manufacturing, given the Apple success story and the manufacturing export competitiveness boost?
So I would agree with that. In the last budget also, they've announced this schemes for providing money for science and technology.
The RDIF,
Yeah, RDIF. So I would say that there would definitely be some mention in the FM speech on that.
Yes, and the finance minister rising in Parliament. You see the speaker there setting the house in order. Finance Minister Nirmala Sitharaman will rise to present her 9th consecutive budget, creating history, not just for herself, but history for finance ministers in independent India. My assumption is that this is going to be a longish budget. So let's listen in.
I rise to lay on the table a copy each of the following papers, Hindi and English versions, under Article 281 of the Constitution. Report for 2026 to 2031, Volume 1, Main Report of the 16th Finance Commission. 2. Report for 2026-2031, Volume 2, Annexures of the 16th Finance Commission. Number 3. Explanatory memorandum as to the action taken on the recommendations contained in the above report.
Item number 2, माननीय वित्त मंत्री निर्मला सीतारमण जी.
Honorable Speaker, sir, on the sacred occasion of Magh Purnima and the birth anniversary of Guru Ravidas, I present the budget for the year 2026-2027. Since we assumed office 12 years ago, India's economic trajectory has been marked by stability, fiscal discipline, sustained growth, and moderate inflation. This is the result of conscious choices we have made, even in times heightened uncertainty and disruption. Our government, led by Honorable Prime Minister Modi, has decisively and consistently chosen action over ambivalence, reform over rhetoric, and people over populism. We have pursued far-reaching structural reforms, fiscal prudence and monetary stability, whilst maintaining a strong thrust on public investment, keeping Atmanirbharta as a lodestar We have built domestic manufacturing capacity, energy security, and reduced critical import dependencies. Simultaneously, we have ensured that citizens benefit from every action of the government, undertaking reforms to support employment generation, agricultural productivity, household purchasing power, and universal services to people. These measures have delivered a high growth rate of around 7% and helped us make substantial strides in poverty reduction and improvement in the lives of our people. Today, we face an external environment in which trade and multilateralism are imperiled and access to resources and supply chains are disrupted. New technologies are transforming production systems while sharply increasing demands on water, energy, and critical minerals. India will continue to take confident steps towards Vikasit Bharat, balancing ambition with inclusion. As a growing economy with expanding trade and capital needs, India must also remain deeply integrated with global markets, exporting more and attracting stable long-term investment. As I begin part A, I want to express my gratitude to the people for standing firmly with us as we forge our way together towards becoming one of the largest economies of the world. Our aim is to transform aspiration into achievement and potential into performance as we ensure that the dividends of growth reach every farmer, the scheduled caste, the scheduled tribes, the nomads, the youth, the poor, and the women. In Vikasit Bharat Young Leaders Dialogue 2026, several innovative ideas were shared with our Prime Minister, which have inspired many of the proposals, making this a unique Yuva Shakti-driven budget. Our government's sankalp is to focus on our poor, underprivileged, and the disadvantaged. To deliver on this sankalp, and given that this is the first budget prepared in Kartavya Bhavan, we are inspired by three Kartavya. Our first Kartavya is to accelerate and sustain economic growth by enhancing productivity and competitiveness and building resilience to volatile global dynamics. Our second Kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third Kartavya, aligned with our vision of Sabka Saath, Sabka Vikas, is to ensure that every family, community, region, and sector has access to resources, amenities, and opportunities for meaningful participation. This threefold approach requires a supportive ecosystem. The first requirement is to sustain the momentum of structural reforms, continuous, adaptive, and forward-looking. Second, a robust and resilient financial sector is central to mobilizing savings, allocating capital efficiently, and managing risks. Third, cutting-edge technologies, including AI applications, can serve us as force multipliers for better governance. Reform Express. Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. After the Prime Minister's announcement on Independence Day in 2025, over 350 reforms have been rolled out. This includes GST simplification, notification of labor codes, and rationalization of mandatory quality control orders. High-level committees have been formed, and in parallel, the central government is working with the state governments on deregulation and reducing compliance requirements. The Reform Express is well on its way and will maintain its momentum to help us fulfill our kartavya. I now move to specific proposals. Under our first kartavya, to accelerate and sustain economic growth, I propose interventions in 6 areas. 1. Scaling up manufacturing in 7 strategic and frontier sectors. 2. Rejuvenating legacy industrial sectors. 3. Creating champion MSMEs. 4. Delivering a powerful push for infrastructure. 5. Ensuring long-term security and stability. And 6. Developing city economic regions. Scaling up of manufacturing in 7 strategic and frontier sectors. Biopharma Shakti, meaning biopharma strategy for health advancement through knowledge, technology, and innovation. India's disease burden is observed to be shifting towards non-communicable diseases like diabetes, cancer, and autoimmune disorders. Biologic medicines are key to longevity and quality of life at affordable costs. To develop India as a global biopharma manufacturing hub, I propose the Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. This will build the ecosystem for domestic production of biologics and biosimilars. The strategy will include a biopharma-focused network with 3 new national institutes of pharmaceutical education and research, popularly known as NIPERs, and upgrading 7 existing ones. It will also create a network of 1,000 accredited India clinical trials sites. We propose to strengthen the Central Drug Standard Control Organization to meet global standards and approve timeframes through and approval timeframes through a dedicated scientific review cadre and specialists. India's semiconductor mission 1.0 expanded India's semiconductor sector capabilities. Building on this, we will launch ISM 2.0 to produce equipment and materials, design full-stack Indian IP, and fortify supply chains. We will also focus on industry-led research and training centers to develop technology and skilled workforce. The Electronics Components Manufacturing Scheme, launched in April 2025, with an outlay of 22,919 crores, already has investment commitments at double the targets. We propose to increase the outlay to 40,000 crores to capitalize on this momentum. A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh, and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research, and manufacturing. To enhance domestic chemical production and reduction import dependency and reduce import dependency, we will launch a scheme to support states in establishing 3 dedicated chemical parks through challenge route on a cluster-based plug-and-play model. Strong capital goods. Strong capital goods capability is a determinant of productivity and quality across different sectors. Towards building this capacity, I propose the following. High-tech tool rooms will be established by central public sector enterprises at 2 locations as digitally enabled automated service bureaus that locally design, test and manufacture high-precision components at scale and at lower cost. 2. A scheme for enhancement of construction and infrastructure equipments will be introduced to strengthen domestic manufacturing of high-value and technologically advanced CIE. This can range from lifts in a multi-storied apartment or firefighting equipment in multiplexes, large or small, and to tunnel boring equipments for building metros and high-altitude roads. I also propose a scheme for container manufacturing to create a globally competitive container manufacturing ecosystem with a budgetary allocation of 10,000 crores over a 5-year period. For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for self-reliance in natural fibers, such as silk, wool and jute, man-made fibers, and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation, and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco Initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further, I propose to set up mega textile parks in challenge mode. They can also focus on bringing value addition to technical textiles. I propose to launch the Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom and handicrafts. This will help in global market linkage and branding. It will streamline and support training, skilling, quality of process and production. This will benefit our weavers, village industries, One District, One Product ODOP initiative and also our rural youth. India has the potential to emerge as a global hub for high quality, affordable sports goods. I propose a dedicated initiative for sports goods that will promote manufacturing, research and innovation in equipment design as well as material sciences. Rejuvenation of legacy industrial clusters. I propose to introduce a scheme to revive 200 legacy industrial clusters to improve their cost competitiveness and efficiency through infrastructure and technology upgradation. Creating champion SMEs and supporting micro enterprises. Recognizing MSMEs as a vital engine of growth, I propose a 3-pronged approach to help them grow as champions. Equity support. I propose to introduce a dedicated 10,000 crores SME growth fund to create future champions, incentivizing enterprises based on select criteria. I also propose to top up the Self-Reliant India Fund set up in 2021 with 2,000 crores to continue support to micro enterprises and maintain their access to risk capital. Liquidity support. With TREADS, more than 7 lakh crore has been made available to MSMEs. To leverage its full potential, I propose 4 measures. 1. Mandate TREADS as the transaction settlement platform for all purchases from MSMEs by CPSEs, serving as a benchmark for other corporates. 2. Introduce a credit guarantee support mechanism through CGT MSE for invoice discounting on TREADS platform. 3. Link GEM with TREADS for sharing information with financiers about government purchases from MSMEs, encouraging cheaper and quicker financing. 4. Introduce TREADS receivables as asset-backed securities, helping develop a secondary market, enhancing liquidity and settlement of transactions. Professional support. Government will facilitate professional institutions such as the ICAI, ICSI, ICMAI to design short-term modular courses and practical tools to develop a cadre of corporate mitras, especially in Tier 2 and Tier 3 towns. These accredited para-professionals will help MSMEs meet compliance requirements at affordable costs. Infrastructure. During this past decade, our government has undertaken several initiatives for large-scale enhancement of public infrastructure, including through new financing instruments such as Infrastructure Investment Trust (InvITs) and Real Estate Investment Trust (REITs), and institutions like NIIF and NABFID. We shall continue to focus on developing infrastructure in cities with over 5 lakh population, that is Tier 2, Tier 3 cities, which have expanded to become growth centers. Public capital expenditure has increased manifold from 2 lakh crore in 2014-15 to an allocation of 11.2 lakh crore in BE 25-26. In this coming year, that is financial year 2026-27, I propose to increase it to 12.2 lakh crores to continue the momentum. To strengthen the confidence of private developers regarding risks during infrastructure development and construction phase, I propose to set up an infrastructure risk guarantee fund to provide prudentially calibrated partial credit guarantee to lenders. Over the years, REITs have emerged as a successful instrument for asset monetization. I propose to accelerate recycling of significant real estate assets of the CPSEs through the setting up of dedicated REITs. To promote environmentally sustainable movement of cargo, I propose to 1. Establish new dedicated freight corridors connecting Dankuni in the east to Surat in the west. Operationalize 20 new national waterways over the next 5 years, starting with National Waterways 5 in Orissa to connect mineral-rich areas of Talcher and Angul and industrial centers like Kalinga Nagar to the ports of Paradeep and Dhamra. Training institutes will be set up as regional centers of excellence for development of required manpower for these waterways. This will benefit youth in the entire stretch of the waterways to train and acquire skills. Further, a ship repair ecosystem catering to inland waterways will also be set up at Varanasi and Patna. And C, launch a coastal cargo promotion scheme for incentivizing a modal shift from rail to road to increase the share of inland waterways and coastal shipping from 6% to 12% by 2047. To enhance last mile and remote connectivity and promote tourism, I propose to give incentives to indigenize manufacturing of seaplanes. A seaplane VGF scheme will be also introduced to provide support for operations. Carbon capture, utilization and storage. Aligning with the roadmap launched in December 2025, the carbon capture, utilization and storage technologies at scale will achieve higher readiness and in end-use application across 5 industrial sectors, including power, steel, cement, refineries, and chemicals. An outlay of 20,000 crore is proposed over the next 5 years for this purpose. City economic regions. Cities are India's engines of growth, innovation, and opportunities. We shall now focus on Tier 2, Tier 3 cities, and even temple towns, which need modern infrastructure and basic amenities. This budget aims to further amplify the potential of cities to deliver the economic power of agglomerations by mapping city economic regions based on their specific growth drivers. An allocation of 5,000 crore per CER over 5 years is proposed for implementing their plans through a challenge mode with a reform-cum-result-based financing mechanism. In order to promote environmentally sustainable passenger systems, we will develop 7 high-speed rail corridors between cities as growth connectors, namely Mumbai to Pune, Pune to Hyderabad, Hyderabad to Bengaluru, Hyderabad to Chennai, Chennai to Bengaluru, Delhi to Varanasi, Varanasi to Siliguri. Financial sector. The Indian banking sector today is characterized by strong balance sheet, historic highs in profitability, improved asset quality, and coverage exceeding 98% of villages in the country. At this juncture, we are well placed to futuristically evaluate the measures needed to continue on the path of reform-led growth of this sector. I propose setting up a high-level committee on banking for Vikasit Bharat. High-level committee on banking for Vikasit Bharat to comprehensively review the sector and align it with India's next phase of growth, while safeguarding financial stability, inclusion, and consumer protection. The vision for NBFCs for Vikasit Bharat has been outlined with clear targets for credit disbursement and technology adoption in order to achieve scale and improve efficiency in the public sector NBFCs. As a first step, it is proposed to restructure the Power Finance Corporation and Rural Electrification Corporation. I propose a comprehensive review of the foreign exchange management non-debt instruments rules to create a more contemporary, user-friendly framework for foreign investments consistent with India's evolving economic priorities. Corporate bond market. I propose to introduce a market-making framework with suitable access to funds and derivatives on corporate bond indices. I also propose to introduce total return swaps on corporate bonds. Municipal bonds. To encourage the issuance of municipal bonds of higher value by larger cities, I propose an incentive of 100 crore rupees for a single bond issuance. 100 crore rupees for a single bond issuance of more than 1,000 crore. The current scheme under Amrit which incentivizes issuances up to 200 crores only, will also continue to support smaller and medium towns. That will also continue to support the smaller and medium towns. Ease of doing business. Individual persons resident outside India, PROI, will be permitted to invest in equity instruments of listed Indian companies through the portfolio investment scheme. It is also proposed to increase the investment limit for an individual PROI under the scheme from 5% to 10%, with an overall investment limit for all individual PROIs to 24% from the current 10%. Emerging technologies including AI. 21st century is technology driven. Adoption of technology is for the benefit of all people. Farmers in the field, women in STEM, youth keen to upskill, and Divyangjan to access newer opportunities. The government has taken several steps to support new technologies through AI Mission, National Quantum Mission, Anusandhan National Research Fund, and Research and Development and Innovation Fund. Our second kartavya is to fulfill aspirations and build capacities. Close to 25 crore individuals have come out of multi-dimensional poverty through a decade of our government's sustained and reform-oriented efforts. Our government has therefore decided to place a renewed emphasis on the service sector to provide a pathway to fulfilling aspirations of a youthful India with the following measures. I propose to set up a high-powered education to employment and enterprises standing committee to recommend measures that focus on services sector as a core driver of Vikasit Bharat. This will make us a global leader in services with a 10% global share by 2047. The committee will prioritize areas to optimize the potential for growth, employment, and exports. They will also assess the impact of emerging technologies, including AI, on jobs and skill requirements and propose measures thereof. To create a range of skilled career pathways, a new range of skilled career pathways for our youth, I propose interventions in the following sectors. Health. Existing institutions for allied health professionals will be upgraded and new AHP institutions established in private and government sectors. This will cover 10 selected disciplines, including optometry, radiology, anesthesia, OT technology, applied psychology and behavioral health, and add 1 lakh AHPs over the next 5 years. A strong care system covering geriatric and allied care services will be built. A variety of NSQF aligned programs will be developed to train multi-skilled caregivers, combining core care and allied skills such as wellness, yoga, and operation of medical assistive devices. In the coming year, 1.5 lakh caregivers will be trained. Hubs for medical value tourism. To promote India as a hub for medical tourism services, I propose to launch a scheme to support states in establishing 5 regional medical hubs in partnership with the private sector. These hubs will serve as integrated healthcare complexes that combine medical, educational and research facilities. They will have Ayush centers, medical value tourism facilitation centers and infrastructure for diagnostics, post-care and rehabilitation. These hubs will provide diverse opportunities, job opportunities for health professionals, including doctors and AHPs. Ancient Indian yoga, already respected in several parts of the world, was given a mass global recognition when Honorable Prime Minister took it to the UN. Post-COVID, Ayurveda gained a similar global acceptance and recognition. Exporting quality Ayurveda products helps farmers who grow the herbs and youth who process the products. To meet growing global demand, a few more steps are being taken. I propose to 1. Set up 3 new All India Institutes of Ayurveda. 2. Upgrade Ayush pharmacies and drug testing labs for higher standards of certification ecosystem and make available more skilled personnel. 3. Upgrade the WHO Global Traditional Medicine Center in Jamnagar to bolster evidence-based research, training and awareness for traditional medicine. Animal husbandry. Livestock contributes to close to 16% of farm income, including of poor and marginal households. To scale up availability of veterinary professionals by more than 20,000, I propose to roll out a loan-linked capital subsidy support scheme for establishment of veterinary and para-veterinary colleges, veterinary hospitals, diagnostic laboratories, and breeding facilities in private sector. Collaboration between Indian and foreign institutions will also be facilitated. Orange economy. India's animation, visual effects, gaming and comics sector, AVGC sector, is a growing industry projected to require 2 million professionals by 2030. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up AVGC content creator labs in 15,000 secondary schools all over the country and 500 colleges. The Indian design industry is expanding rapidly, and yet there is a shortage of Indian designers. I propose to establish, through Challenge Route, a new National Institute of Design to boost design education and development in the eastern region of India. Education. Our government will support states through Challenge Route in creating 5 university townships in the vicinity of major industrial and logistics corridors. These planned academic zones will host multiple universities, colleges and research institutions, skill centers and residential complexes. In higher education, STEM institutions, prolonged hours of study and laboratory work pose some challenges for girl students. Through VGF, viability gap funding and capital support, 1 girls' hostel will be established in every district. To promote astrophysics and astronomy via immersive experiences, 4 telescope infrastructure facilities will be set up or upgraded. the National Large Solar Telescope, the National Large Optical Infrared Telescope, the Himalayan Chandra Telescope, and the Cosmos 2 Planetarium. Tourism. The tourism sector has the potential to play a large role in the employment generation, forex earnings, and expanding the local economy. I propose to set up a National Institute of Hospitality by upgrading the existing National Council for Hotel Management and Catering Technology. It will function as a bridge between academia, industry, and government. I also propose a pilot scheme for upskilling 10,000 guides in 20 iconic tourist sites through a standardized, high-quality, 12-week training course in hybrid mode in collaboration with the Indian Institute of Management. A national destination digital knowledge grid will be established to digitally document all places of significance, cultural, spiritual, and heritage. This initiative will create a new ecosystem of jobs for local researchers, historians, content creators, and technology partners. India has the potential and opportunity to offer world-class trekking and hiking experience. We will develop ecologically sustainable mountain trails in Himachal Pradesh, Uttarakhand, and Jammu Kashmir. Also in Araku Valley in the Eastern Ghats and Podigai Malai in the Western Ghats. Turtle trails along key nesting sites in the coastal areas of Odisha, Karnataka, and Kerala. And 3 bird watching trails along the Pulikat Lake in Andhra Pradesh, Tamil Nadu. It's on the border. Under the visionary leadership of Honorable Prime Minister, we established the International Big Cat Alliance in 2024. This year, India is hosting the first ever Global Big Cat Summit, where heads of governments and ministers from 95 range countries will deliberate on collective strategies for conservation. Heritage and culture tourism. I propose to develop 15 archaeological sites, including Lothal, Dholavira, Rakhigarhi, Adichanallur, Saranath, Hastinapur, and Leh Palace into vibrant experiential cultural destinations. Excavated landscapes will be open to the public through curated walkways. Immersive storytelling skills and technologies will be introduced to help conservation labs, interpretation centers, and guides. The sports sector provides multiple means of employment, skilling, and job opportunities. Taking forward the systematic nurturing of sports talent, which is set in motion through the Khelo India program earlier, I propose to launch a Khelo India mission to transform the sports sector over the next decade. The mission will facilitate an integrated talent development pathway supported by training centers, which are foundational, intermediate, and elite levels. B, systematic development of coaches and support staff. C, integration of sports science and technology. D, competitions and leagues to promote sports culture and provide platforms. And E, development of sports infrastructure for training and competition. Our third Kartavya aligns with our vision of Sabka Saath, Sabka Vikas towards Vikasit Bharat. This requires targeted efforts for 1, increasing farmer incomes through productivity enhancement and entrepreneurship, with special attention to small and marginal farmers. B. Empowering Divyangjan through access to livelihood opportunities, training, and high-quality assistive devices. C. Empowering the vulnerable to access mental health and trauma care. D. Focus on the Purvodaya states and the Northeast region to accelerate development and employment opportunities. Fisheries. We will undertake initiatives for integrated development of 500 reservoirs and Amrit Sarovars. 2. Strengthen the fisheries value chain in coastal areas and enable market linkages involving startups and women-led groups together with fish farmer producer organizations. Animal husbandry. To provide quality employment opportunities in rural and peri-urban areas, we will support the animal husbandry sector in entrepreneurship development through A. A credit-linked subsidy program, B. Scaling up and modernization of livestock enterprises, C. Enhanced creation of livestock, dairy and poultry, enhanced creation of livestock, dairy and poultry focused integrated value chains, and D. Encourage creation of livestock farmer producer organizations. High value agriculture. To diversify farm outputs, increase productivity, enhance farmers' incomes, and create new employment opportunities, we will support high value crops such as coconut, sandalwood, cocoa, cashew in the coastal areas, agar trees in northeast, and nuts such as almonds, walnuts, and pine nuts in our hilly regions. These, all of them, will be supported. India is the world's largest producer of coconuts. About 30 million people, including nearly 10 million farmers, depend on coconuts for their livelihood. To further enhance competitiveness in coconut production, I propose a coconut promotion scheme to increase production and enhance productivity through various interventions, including replacing and non-productive trees with new saplings or plants or varieties in major coconut growing states. A dedicated program is proposed for Indian cashew and cocoa to make India self-reliant in raw cashew and coconut production and processing, enhance export competitiveness, and transform Indian cashew and Indian cocoa into premium global brands by 2030. Sandalwood. Sandalwood is closely linked to India's social and cultural heritage. Our government will partner with state governments to promote focused cultivation and post-harvest processing to restore the glory of the Indian sandalwood ecosystem, to rejuvenate old, low-yielding orchards, and expand high-density cultivation of walnuts, almonds, and pine nuts. We will support a dedicated program to enhance farmer incomes and in bringing value addition by engaging youth. Bharat Vistar, that is virtually integrated system to access agricultural resources. I propose to launch Bharat Vistar, a multilingual AI tool that shall integrate the AgriStack portals and the ICAR package on agricultural practices with AI systems. This will enhance farm productivity, enable better decisions for farmers, and reduce risk by providing customized advisory support. She Marts for rural women-led enterprises. Building on the success of Lakpati Didi program, I propose to help women take the next step from credit-linked livelihoods to being owners of enterprises. Self-help entrepreneur, She Marts will be set up as community-owned of retail outlets within the cluster level federations through enhanced and innovative financing instruments. Empowering Divyangjan. Divyangjan Kaushal Yojana. Information technology, AVGC sectors, hospitality and food and beverages sectors often offer task-oriented and process-driven roles which are suitable for Divyangjan. We will ensure dignified livelihood opportunities through industry-relevant and customized training specific to each Divyangjan group. Divyang Sahara Yojana. Timely access to high-quality assistive devices for all eligible Divyangjan is a fundamental need. I propose to 1. Support the Artificial Limbs Manufacturing Corporation of India, ALIMCO, to set up and to scale up production of assistive devices, invest in R&D and AI integration, strengthen PM Divyasha Kendras, and support setting up of assistive technology marts as modern retail style centers where Divyangjan and senior citizens can see, try and purchase assistive products. Reaffirming our commitment to mental health and trauma care. There are no national institutes for mental health care in North India. We will therefore set up a NIMHANS 2 and also upgrade national mental health institutes in Ranchi and in Tezpur as regional apex institutions. Emergencies expose families, particularly the poor and vulnerable, to unexpected expenditure. We will strengthen and increase these capacities by 50% in district hospitals by establishing emergency and trauma care centers. Focus on Purvodaya states and northeastern regions. Purvodaya. I propose the development of an integrated East Coast industrial corridor with a well-connected node at Durgapur, creation of 5 tourism destinations in 5 Purvodaya states, and the provision of 4,000 e-buses. Buddhist sites in northeastern region. The northeastern region is a civilizational confluence of Theravada and Mahayana or Vajrayana traditions. I propose to launch a scheme for development of Buddhist circuits in Arunachal Pradesh, Sikkim, Assam, Manipur, Mizoram, and Tripura. The scheme will cover preservation of temples and monasteries, pilgrimage interpretation centers, connectivity, and pilgrim amenities. 16th Finance Commission. On 17th November 2025, the 16th Finance Commission submitted its report to the President. As mandated under Article 281 of the Constitution, the government is to lay the report along with the explanatory memorandum on the action taken report on the recommendations of the Commission in Parliament, which, Sir, Honourable Speaker, you've allowed me to do at the commencement of this session. The government has accepted the recommendation of the Commission to retain the vertical share of devolution at 41%. As recommended by the Commission, I have provided 1.4 lakh crores of rupees to the states for the year 2026-2027 as Finance Commission grants. These include rural and urban local body and disaster management grants. Fiscal consolidation. Government has been delivering on our fiscal commitments consistently without compromising on social needs. To strive towards accepted standards of fiscal management in Budget 25-26, I had indicated that the central government would target reaching a debt to GDP ratio of 50 plus or minus 1% by 2030-31. In line with this, the debt to GDP ratio is estimated to be 55.6% of GDP in BE 26-27, compared to 56.1% of GDP in RE 25-26. A declining debt to GDP ratio will gradually free up resources for priority sector lending and expenditure by reducing the outgo on interest payments. One of the main operational instruments for debt targeting is the fiscal deficit. I am happy to inform this august House that I fulfilled my commitment made in 2021-2022 to reduce fiscal deficit below 4.5% of GDP by 25-26. In RE 25-26, the fiscal deficit has been estimated at par with BE of 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. The revised estimates of the non-debt receipts are 34 lakh crore rupees, of which the centre's net tax receipts are 26.7 lakh crore. The revised estimate of the total expenditure is 49.6 lakh crore rupees, of which the capital expenditure is about 11 lakh crores. Budget estimates 2026 to 2027. Coming to 26-27, the non-debt receipts and the total expenditure are estimated as 36.5 lakh crore and 53.5 lakh crore respectively. The centre's net tax receipts are estimated at 28.7 lakh crore rupees. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.7 lakh crore rupees. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 17.2 lakh crore rupees. I'll now move to Part B. Part B, direct taxes. Honorable Speaker, sir, I now present my proposals on direct taxes. New Income Tax Act. In July 2024, I announced a comprehensive review of the Income Tax Act 1961. This was completed in a record time, and the Income Tax Act 2025 will come into effect from 1st April 2026. The simplified income tax rules and forms will be notified shortly, giving adequate time to taxpayers to acquaint themselves with its requirements. The forms have been redesigned such that ordinary citizens can comply without difficulty. Ease of living. I propose that any interest awarded by the Motor Accident Claims Tribunal to a natural person will be exempt from income tax, and any TDS on this account will be done away with. I propose to reduce TCS rate on the sale of overseas tour program package from the current 5% and 20% to 2% without any stipulation of amount. I propose to reduce TCS rate for pursuing education and for medical purposes under the Liberalized Remittance Scheme, popularly known as LRS, from 5% to 2%. Supply of manpower services is proposed to be specifically brought within the ambit of payment to contractors for the purpose of TDS to avoid ambiguity. Thus, TDS on these services will be at the rate of either 1% or 2% only. I propose a scheme for small taxpayers, wherein a rule-based automated process will enable obtaining a lower or nil deduction certificate instead of filing an application with the assessing officer. For the ease of taxpayer holding securities in multiple companies, I propose to enable depositories to accept Form 15G or Form 15H from the investor and provide it directly to various relevant companies. I propose to extend time available for revising returns from 31st December to up to 31st March with the payment of a nominal fee. I also propose to stagger the timeline for filing of tax returns. Individuals with ITR 1 and ITR 2 returns will continue to file till 31st July, and non-audit business cases or trusts are proposed to be allowed time till 31st August. TDS on sale of immovable property by a non-resident is proposed to be deducted and deposited through resident buyers and his or her PAN-based challan instead of requiring a TAN, which is a temporary accounting number. To address practical issues of small taxpayers like students, young professionals, tech employees, relocated NRIs, and such others, I propose to introduce a one-time 6-month foreign asset disclosure scheme for these taxpayers to disclose income or assets below a certain size. This scheme would be applicable for two categories of taxpayers, namely A, who did not disclose their overseas income or assets, and B, who disclosed their overseas income and or paid due tax but could not declare the asset acquired. For category A, the limit of undisclosed income or asset is proposed to be up to 1 crore rupees. They need to pay 30% of fair market value of asset or 30% of undisclosed income as tax and 30% as additional income tax in lieu of penalty, and would thereby get immunity from prosecution. For category B, asset value is proposed to be up to 5 crore rupees. Here, immunity from both penalty and prosecution will be available with a payment of fee of 1 lakh rupees. Rationalizing penalty and prosecution. Multiplicity of proceedings are hindrance to the ease of doing business. I propose to integrate assessment and penalty proceedings by way of a common order for both. There will be no interest liability on the taxpayer on the penalty amount for the period of appeal before the first appellate authority, irrespective of the outcome of appeal process. Further, quantum of prepayment is being reduced from 20% to 10% and will continue to be calculated only on core tax demand. As an additional measure for reducing litigation, I propose to allow taxpayers to update their returns even after reassessment proceedings have been initiated, and an additional 10% tax rate over and above the rate applicable for the relevant year. The assessing officer will then use only this updated return in his proceedings. There is already a framework for immunity from penalty and prosecution in the cases of underreporting. I propose to apply this framework for immunity to misreporting too. However, in such a case, the taxpayer will need to pay 100% of the tax amount as an additional income tax over and above the tax and interest due. Penalties for certain technical defaults, such as failure to get accounts audited, non-furnishing of transfer pricing audit report, and default in furnishing statement for financial transactions are proposed to be converted into fee. propose to rationalize prosecution framework under Income Tax Act while maintaining a careful balance for deterrence in some serious offence. Non-production of books of account and documents and requirement of TDS payment where payment is made in kind are being decriminalized. Further, minor offences will attract fine only. The remaining prosecutions will be graded commensurate with the quantum of offence. They will entail only simple imprisonment with maximum imprisonment reduced to 2 years and power to courts to convert even those into fines. There is no penalty. There is no penalty presently for non-disclosure of non-immovable foreign assets with aggregate value less than 20 lakh rupees. I propose to also provide them with immunity from prosecution with retrospective effect from 1/10/2024. Cooperatives. Deduction is already allowed to a primary cooperative society engaged in supplying milk, oilseeds, fruits or vegetables raised or grown by its members. I propose to extend this deduction to also include supply of cattle feed and cotton seed produced by its members. I propose to allow inter-cooperative society dividend income as deduction under the new tax regime to the extent it is further distributed to its members. I further propose to allow exemption for a period of 3 years to dividend income received by a notified national cooperative federation on their investments made in companies up to 31/1/2026. This exemption would be allowed only for dividends further distributed to its member cooperatives. Supporting IT sector as India's growth engine. India is a global leader in software development services, IT-enabled services, knowledge process outsourcing services, and contract R&D services relating to software development. These businesses and their segments are quite interconnected with each other. All these services are proposed to be clubbed under a single category of information technology services with a common safe harbor margin of 15.5% applicable to all. The threshold for availing safe harbor for IT services is being enhanced substantially from 300 crore rupees to 2,000 crore rupees. Safe harbor for IT services shall be approved by an automated rule-driven process without any need for tax officer to examine and accept the application. Once applied by an IT services company, the same safe harbor can be continued for a period of 5 years at a stretch at its choice. For IT services companies who want to conclude advanced pricing agreement, APA, I propose to fast-track unilateral APA process for IT services and endeavor to conclude it within a period of 2 years. The period of 2 years can be extended by a further period of 6 months on taxpayers' request. I propose to extend the facility of modified returns available to the entity entering APA to its associated entities also. Attracting global business and investment. Recognizing the need to enable critical infrastructure and boost investment in data centers, I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. It will, however, need to provide services to Indian customers through an Indian reseller entity. I also propose to provide a safe harbor of 15% on cost in case the company providing data center services from India is a related entity. To harness the efficiency of just-in-time logistics For electronic manufacturing, I propose to provide safe harbor to non-residents for component warehousing in a bonded warehouse at a profit margin of 2% of the invoice value. The resultant tax of about 0.7% will be much lower than in competing jurisdictions. To provide fillip to toll manufacturing in India, I propose to provide exemption from income tax for 5 years to any non-resident who provides capital goods, equipment, or tooling to any toll manufacturer in a bonded zone. To encourage vast pool of global talent to work in India for a longer period of time, I propose to provide exemption to global, non-India sourced income of a non-resident expert for a stay period of 5 years under notified schemes. I propose to provide exemption from minimum alternate tax, the MAT, to all non-residents who pay tax on presumptive basis. Tax administration. I propose to constitute a joint committee of Ministry of Corporate Affairs and Central Board of Direct Taxes for incorporating the requirements of income computation and disclosure standards, the ICDS, in the Indian Accounting Standards, IND-AS itself. Separate accounting requirement based on ICDS will be done away with from the tax year 27-28. To support Prime Minister Modi's vision of homegrown accounting and advisory firms to become global leaders, I propose to rationalize the definition of accountant for the purposes of safe harbor rules. Other tax proposals. Change in taxation of buyback was brought in to address the improper use of buyback route by promoters. In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. TCS rate for sellers of specific goods, namely alcoholic liquor, scrap, and minerals, will be rationalized to 2%, and that on tendu leaves will be reduced from 5% to 2%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. We reformed the taxation landscape for corporates in 2019 by providing them a simplified regime with lower tax rate so that they could productively focus on business rather than on claim of deductions and exemptions. To encourage companies to shift to the new regime, set off of brought forward MAT credit, minimum alternate tax credit, is proposed to be allowed to companies only in the new regime. Set off using available MAT credit is proposed to be allowed to an extent of 1/4 of the tax liability in the new regime. MAT is proposed to be made final tax, so there will be no further credit accumulation from 1st April 2026. In line with this change, the rate of final tax is being reduced to 14% from the current MAT rate of 15%. The brought forward MAT credit of taxpayers accumulated till 30th March 2026 will continue to be available to them for set-off as above. Indirect taxes. I shall now take up proposals related to indirect taxes. My proposals for customs and central excise aim to further simplify the tariff structure, support domestic manufacturing, promote export competitiveness, and correct inversion in duty. To continue weeding out long-continuing customs duty exemptions, I propose to remove certain exemptions on items which are being manufactured in India or where the imports are negligible. Similarly, to further simplify the process of ascertaining the rate of duty applicable on a particular item, I propose to incorporate certain effective rates in various customs notifications to the tariff schedule itself. I shall now take up sector-specific proposals. Promotion of exports of marine, leather, and textile products. I propose to increase the limit for duty-free imports of specified inputs used for processing seafoods for export from the current 1% to 3% of FOB value of the previous year's export turnover. I also propose to allow duty-free imports of specified inputs, which is currently available for exports of leather or synthetic footwear, to exports of shoe uppers as well. I propose to extend the time period for export of final product from the existing 6 months to 1 year for exporters of leather or textile garments, leather or synthetic footwear, and other leather products. Energy transition and security. I propose to extend the basic customs duty exemption given to capital goods used for manufacturing lithium-ion cells for batteries to those used for manufacturing lithium-ion cells for battery energy storage systems also. I propose to exempt basic customs duty on import of sodium antimonate for use in manufacture of solar glass. Nuclear power. I propose to extend the existing basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035 and expand it for all nuclear plants irrespective of their capacity. Critical minerals. It is proposed to provide basic customs duty exemption to the import of capital goods required for the processing of critical minerals in India. Biogas blended CNG. I propose to exclude the entire value of biogas while calculating the central excise duty payable on biogas blended CNG. Civil and defense aviation. I propose to exempt basic customs duty on components and parts required for the manufacture of civilian training and other aircrafts. It is proposed to exempt basic customs duty on raw materials imported for the manufacture of parts of aircraft to be used in maintenance, repair, or overall requirements by units in the defense sector. Electronics. To deepen value addition in the consumer electronics sector, I propose to exempt basic customs duty on specified parts used in the manufacture of microwave ovens. Special economic zone. To address the concerns arising about utilization of capacity by manufacturing units in the special economic zones due to global trade disruptions, I propose as a special one-time measure to facilitate sales by eligible manufacturing units in SEZs to the domestic tariff area at concessional rates of duty. The quantity of such sales will be limited to a prescribed proportion of their exports. Necessary regulatory changes will be undertaken to operationalize the measures while ensuring level playing field for the units working in the DTA. Ease of living. To rationalize the customs duty structure for goods imported for personal use, I propose to reduce the tariff rate on all dutiable goods imported for personal use from 20% to 10%. To provide relief to patients, particularly those suffering from cancer, I propose to exempt basic customs duty on 17 drugs or medicines. I propose also to add 7 more rare diseases for the purposes of exempting import duties on personal imports of drugs, medicines, and food for special medical purposes used in their treatment. Customs process. India's role and share in the global trade is poised for a major leap in line with our ambition and journey towards Vikasit Bharat. In this regard, I propose many measures for custom processes to have minimal intervention for smoother and faster movement of goods and greater certainty to the trade. Trust-based systems. I propose to enhance duty deferral period for Tier 2 and Tier 3 authorized economic operators, known as AEOs, from 15 days to 30 days. I propose to provide eligible manufacturer importers the same duty deferral facility. This should encourage them to get themselves accredited as a full-fledged Tier 3 AEO in due course. To provide greater certainty and for better business planning, I propose to extend validity period of advance ruling binding on customs from the present 3 years to 5 years. In the spirit of the whole of government approach, government agencies will be encouraged to leverage AEO accreditation for preferential treatment in clearing their cargo. Regular importers with trusted long-standing supply chains will be recognized in the risk system so that the need for verification of their cargo every time can be minimized. Export cargo using electronic sealing. Export cargo using electronic sealing will be provided through clearance from the factory premises to the ship. For import of goods not needing any compliance, filing of bill of entry by a trusted importer and arrival of goods will automatically notify customs for completing their clearance formalities. This will enable goods to be released immediately on arrival. The customs warehouse framework will be transformed into a warehouse operator-centric system with a self-declarations, electronic tracking, and risk-based audit. These reforms will move away from the current system of officer-dependent approvals and reduce transaction delays and compliance costs. Ease of doing business. Approvals required for cargo clearance from various government agencies will be seamlessly processed through a single and interconnected digital window by the end of the financial year. Processes involved in clearance of food, drugs, plant, and animal and wildlife products, accounting for about 70% of interdicted cargo, will be operationalized on this system by April 2026 itself. For goods not having any compliance requirement, clearance will be done by customs immediately after online registration is completed by the importer, subject to the payment of duty. Customs integrated system will be rolled out in 2 years as a single integrated and scalable platform for all customs processes. Utilization of non-intrusive scanning with advanced imaging and AI technology for risk assessment will be expanded in a phased manner with the objective to scan every container across all the major ports. New export opportunities to support Indian fishermen to fully harness the economic value of marine resources beyond our territorial waters. The following measures will be taken. A. Fish catch by an Indian fishing vessel in exclusive economic zone or on the high seas will be made free of duty. Landing of such fish on foreign port will be treated as export of goods. Safeguards will be put in place to prevent misuse during fish catch, transit or transshipment. To support aspirations of India's small businesses, artisans and startups to access global markets through e-commerce, I am pleased to announce complete removal of the current value cap of 10 lakh rupees per consignment on courier exports. In addition, handling of rejected and returned consignments will be improved with effective use of technology for identifying such consignments. I propose to revise provisions governing baggage clearance during international travel to address genuine concerns of passengers. The revised rules will enhance duty-free allowances in line with the present-day travel realities and provide clarity in temporary carriage of goods brought in or taken out. There are honest taxpayers who are willing to settle disputes by paying all their dues, but they get deterred due to negative connotation associated with penalty. They will now be able to close cases by paying an additional amount in lieu of penalty. Honorable Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
One and a half hours.
आइटम नंबर 3 माननीय वित्त मंत्री जी.
Item number 2, sir.
3.
Sir, with your permission, I rise to lay on the table of the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management Act of 2003. Medium-term fiscal policy, fiscal policy strategy statement, and macroeconomic framework statement.
Item number 4, माननीय वित्त मंत्री जी.
Sir, with your permission, I move for leave to introduce the Finance Bill 2026.
प्रश्न ये कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए. जो सदस्य इस पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में, हाँ वालों के पक्ष में अनुमति प्रदान की जाती है. माननीय मंत्री जी, अब विधेयक पूरे स्थापित करें.
Sir, I introduce the bill.
माननीय सदस्य, आपको सूचित किया जाता है कि माननीय वित्त मंत्री जी के बजट भाषण की कॉपी पब्लिकेशन काउंटर पर ली जाती है. बजट भाषण और बजट से संबंधित दस्तावेज आपके मोबाइल फोन और मेंबर पोर्टल्स पर ही उपलब्ध है. सभा की कार्रवाई कल सोमवार दिनांक 2 फरवरी 2026 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है.
Okay, well, markets, of course, taking it hard. You just heard the finance minister with the budget speech. There are two clear things which I think have come through. The net borrowing number for markets is largely in line with expectations, but the gross borrowing number, which has been put out, I think is spooking financial stocks a little bit. The second point, Lata, just 1 minute. On the equity taxation front, I just want to put out, there is a STT increase on options and futures, but the expectation that capital gains, perhaps there will be some kind of a relief, has not come through. Anant Narayan, before the speech, was telling us, well, raise STT in lieu of giving some relief on the capital gains. One has happened, the other has not happened. And I think the market is clearly disappointing. There is a lot of nuts and bolt announcements which have happened, especially on the taxation front. And I think we have experts joining in who will sort of, go through each of them. On the customs side, simplification, easing out of the process of filing, etc., etc. So we'll go through all of that. But I think at a headline level, there is a bit of a disappointment. Can't take away from that fact.
No, I completely take a point on STT, which is clearly, spooked the market. STT has come, but capital gains has not gone down.
I think Samir is with us.
In terms of borrowing, that 17.2 need not worry people, because it's possible that 1 lakh crore will be through a switch or through a buyback, and therefore the effective net borrowing is only 16.2, because the net borrowing has come exactly in line with the market poll that we did at 11.7 lakh crore. So I don't think we should worry. 4.3 fiscal deficit also was as per expectation. Also, sectorally, we were expecting something for chemicals, and some of the chemical stocks are higher. There is some encouragement given to them, as well, some encouragement even given to exporters, textile exporters. But the buyback
is the clear positive. Samir is with us. Samir Arora, founder of Helios. Samir, thanks for joining in. First reaction?
First reaction is that the market will fall much more. I think we have to realize what the issue was. The issue is that we are underperforming like crazy in the world, and the world is not interested, and FIs are not interested. Tomorrow, I'm sure the currency will fall 1 more %. There is no story to tell that on a Sunday, our market goes down 2%. Because the first thing is that you can't just do STT increase because maybe options is bad, futures is bad. But you can't go out of line with what the reality is today, that India is getting highlighted as a poor stock market, not so much the real economy or whatever. And in that sense, these other things matter after 2 weeks, 4 weeks, but it's not easy to get back investors at this with this kind of.
Okay, Madhu is with us as well. Madhu, your first reaction?
I think, Prashant, there was budget is in, I would say, more or less in line with what was expected in terms of consolidation and fiscal numbers. The STT increase, as Samir is saying, is a bit disappointing. But I would say at the same time, the buyback tax being cut is a good positive. Lots of companies, I would say, would prefer now the buyback route versus the dividend route. So I think by and large, just it's in continuation of whatever was happening. The only real big highlight from my perspective, a lot of emphasis on long-term employment generation on various schemes. That's the only longer-term positive which I could pick up. But from a market perspective, I think this event will be over in 48 hours.
Yeah. No, would you agree, Madhu? Samir saying markets will fall more. Today there are no FIIs. Rupee perhaps under pressure again. Would you agree with that?
Not be unfortunately.
It may fall not only because of budget or disappointing because of budget. Generally we have been little out of favor.
Okay.
And Prashant, the spate of new issuance which are even planned this year as compared with even last year, that will also suck out a lot of liquidity. So markets are in a way not been very supportive from an India perspective, and that may continue.
How big is the STT increase, Madhu? If your team has been able to tell you on options, and we have those absolute numbers, but how large is the increase?
Prashant, it is not very big because it's not done on a cash market. It's there on the options in the future market. But from more than the number, Prashant, is a sentiment dampener, right? We are already struggling, and this is a kind of a little bit of sentiment dampener. Then it really hurting in that sense.
Samir,
can we just get the buyback explained? Dinesh, Kanabar, buyback is going to be a big positive?
I think it's quite a bit positive. So until now, buyback was taxed in the hands of the recipient as normal income. We now have it being classified as capital gains for other than promoters. For promoters, if the promoter is a corporate, the overall capital gains tax will be 22.5%, and if it is individual, it will be 30%. So that's quite a bit welcome. Particularly small shareholders, buyback happening, being liable to capital gains tax is very, very welcome.
I think Madhu or somebody actually mentioned that it's good because otherwise it was being taxed as dividends in the hands of the taxpayers. Now, of course, it will be taxed at a concessional rate, 12.5% for minority, and then 22 or 30. Depending upon
the government recognizing, well, what happened was perhaps not...
Yeah, they moved from one length where tax was in the hands of the company used to pay the buyback tax, to removing it and saying it's now taxable in the hands of the taxpayer as dividend income. That was extreme. So if you were an owner, what happened to the loss that you were incurring?
So what happened is that there was a tax in the hands of the company. The corporate India represented that make it taxable in the hands of the recipient with an expectation to be capital gain. Be careful what you ask for. It got taxed as normal income. Now it's gone back to capital.
It's very positive.
Let me get in. Samir, I know you've given your, in that sense, your first initial thoughts, but some of this other stuff, buyback, and there's a long, as Madhu was pointing out, long term, I mean, what is being laid out, maybe immediately what market was expecting has not happened. But do you think this kind of allays some of the some of that disappointment?
We're not saying that what was expected has not come. This was unexpected and negative for no reason, because it is clear that we introduce STT in lieu of capital gains tax. Now the STT are increasing more and more, and and in an environment when the environment is clear that India last year underperformed markets by 20-30% in currency terms, even more maybe, and even this year just in like 30 days the currency has depreciated relative to US by 4-5% or something. I mean, in that context, this STT could have been delayed. Other things are broadly okay, but the markets are very sensitive to a few clean things. Okay, maybe there would have been no cut in capital gains tax. Okay, that even I didn't think much. But at this time when the market is already showing weakness, to add one more thing is not required. The long term, I agree, and that's why the beginning, the market itself was correctly interpreting the market rallied, because the long term things, they pressed all the right buttons in terms of new sectors, new things, education, tourism, and all their semiconductors, manufacturing, etc. But there's no need to randomly hurt the market at a time when the market is proving to be important, both from a currency point and from the exit of PE guys or whatever, leading to negative overall FDI or
on FDI,
at that time it was not required at all.
On FDI, there is a positive in terms of those who invest in data centers. They're going to be tax exempt if they sell data outside up till 2047. Some FDI should come.
Not only that. Sorry, please.
No, that's clearly a positive. I think we had all expected that data centers would be an area where government would provide an opportunity for long-term investment, and by dating it through till 2047, they're clearly providing clarity and certainty. If data centers were to provide services to overseas users, then income is fully exempted. But they have not kind of limited it to saying only to global. When the original FTZ policies were given, you couldn't sell it to domestic. They've said you can also sell it to domestic through a local subsidiary. So I think that's positive.
Yeah, Prashant Khemka is also with us. Prashant, Samir not holding back. Your thoughts, what's your sense? What he said is interesting, and the way he put it, which is that it is not that what was expected did not come, but I mean what has come was not expected, and that is the reason why markets are down sharply. 400 points now, 450. Prashant.
Sure, Prashant. So I think from a stock market perspective, the STT per se is not that. And Samir also pointed out, it might be more sentimental. The STT on FNO may not be as much of a negative from a cash market perspective. But capital gains tax, there was some hope, even though I don't think that people put a very high probability on it. But if there was ever a time, then investors were expecting it might be the time that capital gains tax, where India, in a way stands out amongst other emerging markets or other markets in general, there could be some hope for chances of bringing it in line with the global market. So that could be partly negative. Otherwise, I think from a stock market, from an investor perspective, there isn't a major negative or a major positive. It is continuation of what was going on in the past. Maybe there were expectations that given what's happening geopolitically with the tariffs,
It'll be tough to do very much. Absolutely. Madhu, let me come back to you. I know you have a team which is looking at this closely. Anything else which really stands out, which you want to highlight, Madhu?
I'll have to explain. Can't write it.
Prashant, I'll just take Sameer's point.
Yeah.
You know, one has to look at it from an overall balancing perspective. There is a lot which the government has done off budget. Let us say that 4 months back, the GST cut which was off budget, it came today. Along with the STT, it would have been treated as a big bang budget and it would have been considered as a very big positive. So I think a lot has happened even beyond budget. It is slightly disappointing and to that extent may have been avoided given the overall sentiment today. But I don't think this is like a make or break point from Indian market.
No, I don't think that is what Sameer is saying.
And the second thing, if you once will...
Yeah. Go on.
Yeah. That's exactly what I'm also saying. That, you know, it's a knee-jerk reaction because there is some amount of also expectation which was being built up from a long-term capital gains perspective in the market. So that is also kind of discounting today as a reaction. But when we look into details, I think there's a lot which is being done in this budget, I would say, for various sectors, which is really beneficial from a medium long-term perspective. So in my understanding, from market perspective, we are back to basics. Look at individual ideas, do your bottom-up work, and that's the India story.
Okay. You know, let me look at one more positive, perhaps. Mr. Kanabar, NRIs have been permitted to invest in PMSs, and also the tax has been lowered.
So 2-3 things. First is NRIs have been permitted to invest through PMS and also make direct investment. They were always permitted. That rate the limit has gone up from 5% to 10% per NRI, and the overall aggregate limit has gone up from 10 to 24. Okay. Practically, I can tell you that we have faced this limitation when we are advising clients, and therefore this will open up an avenue. Okay. So it's quite a positive. And maybe one other thing while we are on this from a tax perspective, there are just too many things, but just one issue is on MAT. So what we are seeing here on minimum alternate taxes, government wants people to move from the old tax regime to the new tax regime. So what they have said is, if you had an accumulated MAT, which was prompting people not to go to the new tax regime, you'll be permitted to transfer, set off in a calibrated manner, and going forward, there is no MAT credit. So people will move to the new tax regime. But lots of other changes on tax side.
Okay.
You know, at one
that is the way we have to interpret no MAT credit.
Going forward.
Going forward.
Oh.
But that's only for companies who are in the old regime.
Okay.
Most of the companies have already migrated to the new regime, and the thing which was prohibiting them, which was accumulated credit, is now permitted, but to be absorbed at a quarter each year.
Got it. So not to worry so much about that. Shireen, you want to come in on any thoughts?
No, Lata, just to sum it up, I think, and if you had been listening to my panel of experts here, and these, as I pointed out, are the budget makers. They've been responsible for putting budgets together in the last few years. And they were very clear that don't expect any reversal reduction as far as capital gains was concerned. Don't expect anything on STT. Nobody went as far as to expect a hike as far as STT is concerned, which is what happened. But they were very measured in that expectation of any kind of a reversal, rollback, relief on long-term capital gains tax, short-term capital gains tax, and so on and so forth. But the overarching theme, Lata, as we've been pointing out, and I'm going to get my experts to comment on that, this is a budget that is reacting not just to the here and now. It's a budget that's now laying out the priorities, the focus areas for the next 5 to 10 years. Nuclear power, I told you that we're going to see a mention of that, and that's exactly what the government has done on the electronic manufacturing sector, on AI, on data centers, and so on and so forth. So there is plenty there that is likely to play out in time, but the market, of course, reacting to what the market will react to, which is the here and now. But let me get our panel of experts to get right into it. Mr. Bajaj, you were absolutely clear. Don't expect any relief on LTCG. But were you expecting an STT hike, which is what has come in for futures and options?
So I think that has come basically because there is an attempt, there's a lot of news of people actually losing a lot of money there. So something was done in the intervening period. So I think that is a measure perhaps to control that and not so much as a measure of raising revenues.
Raising revenues, my hunch was they would revive disinvestment, at least the disinvestment target, 80,000 crores versus 33,000 crores. What do you make of that?
So I would say that there are some things which are in the offing. For example, the IDBI disinvestment should happen and the money should come in the financial year 26-27. And also maybe LIC's follow-on issue might happen. So I think 80,000 crores is something which is very reasonable, seeing these two things in context. So I think the government has been very, very conservative on that aspect.
Conservative still, but a higher, much higher target that we've seen in the last few years. Mr. Chakrabarti, you know, from a overarching standpoint, what stood out for you as far as this budget is concerned?
Couple of things. At least my expectation was to retain stability. So if you see across the budget, there has not been a change to radically move from one end to the other. It reflects a government which is very matured now, has been there in power for long. They are continuing with the agenda of infrastructure. If you see, NIIF, Credit Guarantee Scheme for Infrastructure. So those are stability measures. They are provided for all the major steps that has been taken, especially towards technology, data center, and so on and so forth. So there, special impetus has been given. Again, on the infrastructure side for high-speed rails between major cities which are growth center. And those growth center, if you see in the scheme of things, have been recognized.
Yes.
And I also see a major thing, I hope it turns out to really push the economy, is also this high-level committee on banking for inclusion and for consumer protection. I guess that is the
She also used the words of improve and efficiency and scale for Viksit Bharat. What is the India banking sector requirement? In that context, do you believe this talk around consolidation, etc., or perhaps even hiking the FDI limit for PSBs? I mean, some of those measures may be part of now what this high-level committee looks at?
This committee, one has to see ultimately its terms of reference. Beyond FDI is already at 75%. Making it 100% will perhaps increase a little bit. It's more important that the consumer confidence is retained. Of late, those digital arrests and all those things had dented it a little bit. And not that the banking itself, however, an overall thing, and FM had referred to it. So I guess referring to consumer as such has been, I see it as a very, very positive step. And also the credit guarantee for infrastructure. And she has also talked about, this is my favorite, the bond market.
Yes, she has talked about the bond market. But Mr. Armani, let me ask you, sir, on the defense side, you know, it's, I think, gone up to about 5.69 lakh crore rupees. We were hoping that she would talk about it in the budget, but she hasn't. So on balance, your take on defense?
I just got confirmation that overall budget has grown by around 21%.
21%.
And the capex also has grown by 24%. This is huge. As expected, the defense allocations have gone up substantially, and most of it will go into...
And the 21% is BE to BE?
Yeah.
Okay. So just to clarify, the defense allocation is up 21% BE versus BE. So if you do BE versus RE, it will be a different number, but BE versus BE up 21%, which is exactly what you had said.
Yeah. This will certainly boost the preparedness of our military services, and I hope the defense industry will also get a great fillip through this. Apart from the allocations directly, there are other important announcements made today. One is the defense corridors, which will get boost from the 7 sunrise sectors, especially semiconductor sector. They will help the defense production to be seamless, and also supply chain problems will be sorted out because of that.
Okay, so that's the other, the defense corridors is the other announcement. Some disappointment there. You were expecting customs duty rationalization. That doesn't seem to have been announced, but there's a lot of exemptions that have come in for specific sectors, for specific components, and so on and so forth.
Yeah, Shireen, so
Yes, the big ticket customs rate rationalization has not come through. But part of the reason could be that the government is banking more now on FTAs, which are also providing a huge opportunity to initiatives like China Plus One and others, which other trading partners are looking at. But there are some changes on expected lines also. For example, the change for SEZ units supplying into the RTA, I think that's a good move.
But many caveats attached to that. And what is that time period for that one-time window is something that we require clarity on as well.
So we'll need to see the fine print to decipher that.